You're always going to remember now where you were BC, before coronavirus, and AC, after coronavirus, is we've never had the economy go to zero in less than a week. This is a V. We were going along and we fell, boom, like this. The upside out of this is another boom straight up. The pain that was so painfully created in 2007 and 8, the economic pain on top of a lot of other pain that was created in 9/11, we learned something from that. And all of it's working right now. I've been writing a book called The New Roaring '20s, and why the 2020s are going to be just like the 1920s, 50% growth in GDP, everything's great. But what's going to happen is all those changes I said were going to take place in 10 years, they may happen in 5.
Too many people are trying to pick a direction if Apple's going to go up or Apple's going to go down. Well, what's happening is Apple goes up 10% one day and goes down 10% the next day. I'm picking ranges that are extreme and that all I have to do is be right and the stock stays within a range and then I can be profitable in that trade. The most intelligent, most educated people are not the ones that are most successful usually. It's the ones that stick to a plan and are disciplined and don't try to deviate from what works. I really think that we are in the early stages, not in the recovery stage of this thing yet. So if we look at history, markets can go a lot lower than 30%. And there's days that you think the economy is doomed or we're gonna get through it and there's gonna be some clear winners. And history's always proved that we're gonna get through it. And I believe that'll be the case too.
Welcome to episode 1 of Crisis Investing 2020. This has been a really interesting project for us at a very unprecedented time in human history. It was not what we planned. This wasn't our agenda for this part of the year, but the coronavirus, this pandemic, and all of the things surrounding it caused us to have to really pivot very quickly and respond to the questions we were getting from people like you. Crisis Investing 2020 came about because so many people were stuck saying, I am paralyzed, I don't know what to do, I know there could be great opportunity right now, but also there could be some great challenges and I don't know how to navigate these waters. Fortunately for us at Revealed Films, we have access to the greatest minds in the world, literally the people who know this stuff best, and we said we need to bring this to you. So this is a little bit out of our normal format. We didn't take film crews and spend 6 months running around the country or the world talking to these people. We had to practice our social distancing. So through Zoom technology, we were able to bring these people with their current ideas right up to the moment to you right now throughout this series. I will tell you that personally, there's a lot of information here that was not only very valuable for me, but I shared it with friends as quickly as I could, and I think you'll want to do the same. Anybody that you know, friends, loved ones, adult children, get them to watch this series. This is something very timely, very powerful, and literally can change your future. I'm not going to get into any more details about the entire series right now because the first part of episode 1 is myself and my partner in Revealed Films, Jeff Hayes, discussing the series, discussing the takeaways that we have from it, and literally talking about some of the things we put into motion based on what was learned in the series. Also, in addition to our segment with Jeff and I, in episode 1, we have Zane Pilzer. Paul gave me the greatest sense of understanding after listening to him because he's an economist. He was an economic advisor to 2 United States presidents. He's also a serial entrepreneur. But this is the first time I've ever seen Paul not only talk about the economic implications of what's going on and what he predicts will be the outcomes, but further, he revealed personally the things that happened in his life relative to his finances, his wealth management, and this whole sudden seismic downturn in the economy. You'll not only hear Paul talk about his views from a macroeconomic standpoint as to what's happening right now and how he thinks things are going to turn in the near future, But further, he talks very deeply and personally about his own personal wealth management through this process. What happened with the holdings that he had, his responses to the market, and how he is using the downturn in the market to his advantage and where he might go forward from here. Something that everybody, I think, needs to hear and understand. We also talked to Jeff Bishop. Jeff Bishop is the founder of RagingBull.com. He is a stock trader. He's got years and years of experience trading in the market, and he has his own reflections and strategies as to what happened, how he thinks it impacts his thinking right now, and what kind of trading he's doing in this market, something you're going to learn from. Let's jump right in and see you inside of episode 1. So Jeff, we're going to talk about Crisis Investing 2020. This was a little bit of a self-interested project, at least how it started, and then it expanded into saying, we need to share this.
Well, if you look at over the last year and a half, we've interviewed right at 100 of the world's best experts on investing and money. Yeah. And it's almost like, and now the rule book has been thrown away. Yeah. And so I love that what we do allows us to pick up the phone and call world-class experts on, okay, now what are the rules?
Yeah, I mean, the two main areas that we focus, ironically, are health and finance in Revealed, right? And certainly what we have is a crisis with health and finance, and we started putting out some content in health and we'll continue to, but that was sort of amply covered out there. The finance side was where our audience at least seemed like they had tons of questions, didn't know what to do, a lot of paralysis, and it was great that we could tap some resources and get some information.
Yeah, the biggest problem that I personally am having and that I'm seeing is noise. In that we've got all these self-proclaimed experts, and it's much worse in health than it is on money. On health, you have all these people giving advice, and I listen to it and I realize they probably shouldn't be.
Yeah.
And so there's just all this noise, and the question becomes, okay, I need some guidance here, but who do I listen to? And on the finance, income, wealth side, this is a little more of a vacuum, but I really want people to be cautious of who they listen to, because there's a lot of bad advice out there, and that's what we were able to do is we knew who to call. Yeah. But when I include people to not listen to, I'm chief among them. Don't listen to me. I'm a filmmaker, not a finance. I know a guy who knows a guy, and so we can get to that guy. I'll tell people what I'm doing, but none of this, it'd be like if you needed surgery, calling me up and asking me for surgical advice. I know some people, but don't listen to me.
And one of the things that really sunk in for me doing all these interviews is that you can't try to figure out what to do based on sound bites. People, hey, you got this guest on this news show or business news show or what have you. They're there for 3 to 5 minutes. We're not at the bottom yet, or there could be a new bottom.
They're saying the most provocative thing they can say. It's 3 minutes.
It's 3 minutes, and you're trying to give what they think is a context, but literally you'll walk away from that with no valuable information. You really have to have a conversation and kind of dig deeper and get some experiential stuff in there. What's happened in the past? What's going on now? Here's how to think of it. And one thing is definitely for sure as a takeaway, there is not a one-size-fits-all scenario here. Your circumstances really matter as to what to be thinking right now. And that's what these interviews in this particular series really brought to light.
Yeah, I've made tremendous changes in what I'm doing based on the interviews we've done. Yeah. And I'm sharing them with my kids. So all of my kids are adults. Most of them have kids. We did a Zoom call last Sunday and just say, okay, here's what I know about this. Here's what we're hearing about this. Everyone watching this, if you're in my situation and you have adult kids, should make sure your adult kids get to see it.
No doubt. One of the interesting things, it's a little bit of I won't say comical, but it put a smile on my face, was some people who are in it said, "Hey, what did so-and-so say? Can I watch their interview?" So they want to know what different experts, because they have different areas of expertise, and they know that they have blind spots also. So you get like, oh, here's a macroeconomic view. That's really important. Oh, wait a minute. Here's a trader who does swing trading, their point of view about what's going on, and everything in between. So it's interesting that the experts also are interested in wanting to know what the other experts are saying. Again, not in a soundbite fashion, but they need the deeper dive to kind of walk them through the full scope of the thinking so they can take away from it something that's valuable.
Yeah, so I really want to cover what I've done based on what...
Let's jump into that, because I know that so what happens is basically the interviews are coming off, they're in raw form, and you're reviewing them, and you're literally reviewing them for editing and so on, and in addition, you're also saying, oh, I'm going to take an action on that right now. So let's talk about some of those.
Yeah, so it's funny. I have 2 house guests that are staying in my house. I have a big house. They were coming. They had just gotten in from Spain and retired from Delta, and they were going to stay a week. And now it's the Roach Motel. They check in and they can't check out. So after about a week, and we saw all this developing, they came downstairs and went, "Hey, I think we may be stuck here." And I'm like, "I knew you'd be stuck here. This is perfect." Yeah. But in the mornings, we're sitting at my kitchen island, and all 4 of us, Dory and James and Dee and me, all of us have computers. I'm watching the previous day's interviews and telling them what I'm seeing. They're watching these interviews. They have a large retirement account that they're managing. They got out of the market completely on February 20th. And so literally this advice that you're doing all these interviews, we're putting into action, within hours, and not all the advice we're hearing. We're listening and choosing. The first thing that I've done this time that's different, I have a giving account. I'm not a part of any organized religion, and I decided in January this year that I was going to put 10% of my income, like a tithe, into a giving account. And Dory and I have given away a lot of money this year. And right now, we're having a lot of fun giving away money and choosing people that need it. We have a friend, you and I, Ron Lynch, who started something on Facebook called IntelliHelp. And you can go to IntelliHelp on Facebook, and it is just a platform that's all over the world. If you're willing to help someone, and if someone needs help, then they get together. So somebody happens to be in Albuquerque, New Mexico. Hey, I'm shut in and I need food. Someone can see that need and then go and help them. But I really wanted to talk about this first because for me, it's easy to get into a bunker mentality and, I got to collect, I've got to do that. It's like, wait, we've got money in our giving account, and giving during this period creates a feeling of abundance for Dory and I that is the right mindset that I want to go through this with. So the first thing somebody should consider is wait a minute, I'm better off than some people. And again, I'm at a different stage. My kids are grown. This is, and it's a little easier for me. But whatever you have to do to think from abundance, as opposed to concern and worry and fear.
Well, one of the things you mentioned about your friends who are here who got out of the market in February, one of the things that I made sure to do in as many of the interviews as possible is to give scenarios, because the rules, it's not the same rules apply the same to everybody.
Right.
If you got out of the market in February and now you're looking at what to do, it's a very different consideration than if you were in the market this whole time and now you're looking and saying, what do I do? And these experts really understood the varying perspectives and where to work from there. As you said, I've got, I don't have kids at home anymore. I'm in a different phase of life and so on. Maybe some people are sitting there with 3 little kids at home and they're not working, but yet you still have some liquidity. You want to figure out how to navigate these waters. So, and that's what I'm saying. A soundbite doesn't help anybody. As a matter of fact, even a single interview that you watch or a single episode that could be, a couple hours long isn't enough. This is one that you really have to consume pretty much the whole thing to get all the perspectives, the different ideas, how people see it. You are going to see also that some of the people that we interviewed contradict each other, not in a direct contradictory way, but have different views. So one person sees options trading right now this way. Another person says, I see it kind of different than that right now. So you need to take it all in and ask yourself the question, what does this mean to me? And that's going to really help to inform you during the course of consuming this content.
I see that every morning at my kitchen island. We've got 4 people sitting there with 4 different temperaments. And Dory's watching what I'm doing, and I've done some options that after watching Andy Tanner, who everyone gets to see, that I just fell in love with, and I've done some options trades that I'm really happy with. And so Dory wanted to do some options trades. And then after a couple of days of that, she's like, okay, I hate this. I'm worried about it. I don't understand. How could I sell a put? I want to buy Delta stock. Why am I selling a put? Why am I not buying? And it just, and threw her hand up and said, okay, this is not. Meanwhile, James and Dee have a completely different perspective, but the information is all in there. And I did, I bought a call for January 15th of next year on Delta stock. I may be right, I may be wrong. I got a great price on it, and it's done fine since then. But I'm not even worried about it. I'm going to wait until the fall, until I bought the longest term call. James and Dee are looking for the market to lower, and they're going to be buying blue chip dividend paying stocks that once the market recovers, then they're going to write covered call options to produce an income for them. A completely opposite strategy of the one that I have. I'm not looking for income from stocks. I'm looking for appreciation from stocks. So it's not that any of our experts are giving bad advice. It is, what is your temperament? What is your outcome? What is it you're looking for? Although everybody across the board is looking to protect what they have, and I think we've got great advice for that.
I think that really exemplifies so much of what the nature of this series is. People would like to know, what's the magic formula and everybody learn it. It's just not that way. Everybody's different. And what it also reveals is the fact that there's definitely more than one way to navigate this and win. It's not like if you do this, you'll win, and if you do anything else, you'll fail. There's multiple ways people can navigate these areas where they can protect themselves and they can win on the upside. The thing that we know is that there's no doubt that during these big economic crises, these downturns, there's a lot of opportunity there. But it has to be done intelligently. And a year from now, 2 years from now, people can look back and say, I missed it. Or they can look back and say, you know what, I really did my homework and did it right, and we ended up in a good place. And that's what we're hoping to deliver here.
One of the things I did after listening to Zane Pilzer, who's coming up next, I was shocked when you're talking to Paul Pilzer, and he says he liquidated at the bottom of the market. I mean, when the market was down, he sold all of his stocks. And I'm like, wait a minute, here's one of my most trusted advisors. Why in the world? But meanwhile, he was in a different situation. In the first quarter, he had a windfall come in, and as he'll explain, he liquidated to offset the taxes on that, and then is repositioning himself. And it was really brilliant. I'm listening to that. I bought, because of our interview on Money Revealed, I bought Overstock stock at 20, and then I bought it again to average down, I think at 11 or 13, and that stock was in my account forever. It went down to 7, and during this it went down to 4. I think it went to 2 at one point. I don't care. I'm just going to sit with it. However, Patrick Byrne was the reason I bought the stock. I love that guy, and he left the company. And so now I lost my emotional connection, and I lost some of my just personal belief because I wasn't really following Overstock. I was following Patrick Byrne. I listened to what Zane Pilzer said and did something I would have never done in a million years. I liquidated my Overstock stock, I think at $4.47, and took a loss, but it's okay because I had other capital gains that now I have that tax loss carried forward to offset. So this was a strategy that I would never have considered that am delighted with, and it frees me out of a stock that I lost my emotional connection to, which normally that would be, I've told Dory, she'll get scared and one of her stocks go down. I'm just close your eyes, quit looking at it, ride this out. All great stocks, go up and down. And so that one was different. And this is what I'm talking about, temperament. Mm-hmm. But you'll find temperament differences even in your own home. Mm-hmm. When you and I have been working on a series for women in money called Women in Money.
Right.
And those interviews I've talked to you about, I'm like, Patrick, these are completely different. Right. They're not satisfying to me. But I'll have women in the room when we're doing the interviews, and they're like, oh, that was so great. And finally, Naomi Whittle explained to me the difference. She said, Jeff, for men, making money is sport. Mm-hmm. For women, it's a completely different thing.
Yeah.
And so as you work through what's the temperament, you need to pick through these interviews and find someone that matches your temperament, but the good ideas are all here.
Yeah, and you're going to find that incidentally surprising. Like, I don't think there's any way to predict out front of an interview if it's going to apply to you or not. You really just have to consume it. You have to actually watch it, because I ended up 20 minutes into an interview, all of a sudden I was like, oh, I didn't see that coming. and so that's why I wish I could say, oh, this interview is for this person, this interview is for... No, there's many facets to every single interview, and you really need to listen through them. Like Mike Dillard covered a lot of ground, and I could say, okay, in general, the mindset for this, yes, he covers that, but also there's a lot of other things that he said that were very shrewd based on past experience that he brought to the table. And I wish I could say, oh, there's a type of person, but there's things in there for multiple people in that interview. And I could say that about many of the other ones also. So this is a little bit of a different animal compared to what I'm used to in the interview process, where I'm saying, ooh, there's multiple facets that are applicable to many people, as compared to saying, that's the bullseye for this particular interview. So it's different. And I think a little bit more beautiful in that sense, that there's something in it for everybody.
Well, as you know, we did this first for us.
Mm-hmm. Yeah.
And I have we did it for our kids, my adult children, your kind of adult.
Semi-adult children.
Semi-adult children. And so I really want to encourage anybody that's in my situation, share this with your kids. It's free. It's what it's here for.
Yeah.
And this is our best contribution that we can make.
And we should say out front, incidentally, listen, it's the midst of the coronavirus pandemic, and we have to practice social distancing. As a matter of fact, our crew set our chairs further apart than usual. Hey, how you doing over there? Normally we're a lot closer, and we had to do these via Zoom, so we weren't able to take film crews out and go get these. The upside is we're able to get it done normally it would take us 6 months to do this work. We got it done in a couple of weeks, working very hard day and night. But it's timely. I mean, it's right now information. But we'll apologize in advance that we normally don't do things over Zoom. We bring film crews and do real documentary work. In this case, we're documenting a lot of really important information, but it's going to be through Zoom. And even Zoom is a little wonky because of the amount of demand on it. So we'll apologize in advance for the
information's worth it.
Yeah, the information, the quality of the video is going to be as good as we can get it, but the information is priceless in my mind. Well, anyway, I don't think we should be holding people up anymore. We know we have Zane Pilzer coming up next, and that to me was just like, okay, that's the big picture. He's the first interview because he is truly a genius at looking at the big picture and having it make sense and having people have context for what is really happening right now. And what I loved about this interview, incidentally, and teeing it up, is how transparent he was about his own personal things he was doing. Not just saying, hey, I'm an economist, I served 2 United States presidents, but here's personally the exact stuff I'm doing right now. And I've known Paul for a lot of years, and he's never said those types of things to me, even on a personal level. So I'm really happy that we could share this.
Me too. Changed what I did.
Yeah. Well, I have to say, out of all the people in the world that I know or I've interviewed, the person who I believe would have the highest level understanding as to what's really going on right now in the world, especially when it comes to the economic decline, the crisis that's going on, what crisis investing might look like as compared to the world before the whole coronavirus pandemic. So Paul Zane Pilzer, you've seen him in our Money Revealed docuseries. There's many accolades, but just know that he's one of the smartest people that I've ever met in my life. He is somebody who's been an economic advisor to 2 American presidents. He's written several best-selling books in economics, several of which have influenced me in extraordinary ways. And in addition was a professor of economics at NYU at New York University. And we could go on and on and on. He's also a serial entrepreneur that's had so many ventures that I probably could take an hour trying to list them all through his years. But earlier today, Paul started to talk to me about what was going on. I was like, can we please record this? It's something that I think we need to share with our audience. So for this Crisis Investing 2020 series, this is one that you really, really want to pay attention to get an understanding and context. So Paul, thanks for being here.
Thank you, Patrick. I want to state before we start, because things are changing so rapidly, that anything I say is old an hour later, a day later. Sometimes it's useful analyzing. So the first thing we need to say is today is Wednesday, March 25th. Looks like it's 4:31 p.m. The markets have just closed, stock market's closed, and we are beginning our interview. And I want anyone to, knowing even parts of this interview when you're editing, flash on the screen, please, the date and the time, because it may not be accurate tomorrow, and I have to throw out that disclaimer. We've certainly never, ever in our lifetime seen anything ever change this quickly. And I guess that's probably a good place to start, because you're here to talk about coronavirus, COVID, its impact on the economy, and more important for your viewers, what's the opportunity in the economy? Right. And that I'm pretty comfortable going through. I do feel a little like a bad prophecy. I can remember a little over 20 years ago when I got married, and I was working in Washington. I was teaching at NYU, bringing my girlfriend, now wife of 20 years. And Lisa said to me, well, you go to Washington, you go to the White House, you go to, what do you do? And we got married, like, are you going to run away and go do all this stuff? And I said, Lisa, I spent 5 years back and forth working in Russia, in Soviet Union. The country I work with doesn't exist. So I have no expertise. It's useless. Everything I know about my way around the Soviet Union is completely useless. The country went away. It's not important anymore. It's its own little country. Who would have thought Russia would step up? And the only other time I'd be called out of retirement to say do something would be if there was a major banking crisis, because I was the pivotal point man on the savings and loan crisis from 1983 when it started to 1989 when I was the senior officer trying to fix it in the Reagan administration. And I got frustrated and went away and wrote a book, Other People's Money, which was the inside story of the S&L crisis, and in fact made my career at a very young age. So here we are today, that not only is Russia potentially a problem and back in the news as a world power, but banking crisis, I never expected to ever see or use my expertise or contacts. And what I've been doing the last few days is talking mainly, or they're calling me, bank regulators, current and past. Because how we're going to get through this from a banking standpoint has a lot to do with how we got through the financial crisis of 2007. No one remembers the biggest crisis before that was the S&L crisis of 1987. And of course, the stock market crisis in 87. I was literally and figuratively in the White House on Black Monday, working that day when everything crashed on Black Monday in 1987. So let's get started and talk about what's so different about this crisis than every other crisis, almost as a disclaimer. Normally you have something called a depression and a recession. Recess implies a little bit, right? This way. Or a depression, you push in, and what happens when you take your finger off? It comes back out. Because that's how economy works. And we even call a big change up and down a depression because we know it's coming back out. It's a U. This isn't that at all. This is a V. We were going along and we fell, boom, like this. And of course, we'll talk a little bit in a minute, while the upside out of this is another boom straight up. But normally it's a U. It's a depression, and the forces are pushing it back up to come back. So it's scary at unbelievable levels right now, whether it be negative interest rates or so many other things we should talk about in setting the introduction for this, is we've never had the economy go to zero in less than a week. I've characterized the world today as all of us are going to know the letters AC and BC. Now, that may not mean a lot to you, but if you're a Christian, I bet you know what BC means, before Christ. In fact, I'm Jewish. I'm not Christian, but to my Muslim and Jewish friends, BC is a very significant time because the birth of Jesus Christ changed the whole world. And then we define any kind of event. We go, is that AD, Patrick, or BC you're talking about? We define that as the pivotal moment, the birth of Jesus Christ, as defining the rest of the world. Same thing right now. Just as you can tell me where you were, oh, maybe you can't because you're too young, but my people, my age, can say, where were they when Kennedy was shot? Where were they when Lee Harvey Oswald was shot? Where were they when the bombs came down on 9/11? And people remember exactly where they are. You're always going to remember now where you were BC, before coronavirus, and AC, after coronavirus, because so many things are going to permanently change, and so many things are going to come back and be like they were. But we define ourselves by BC and AC. And it's important to remember that AC and BC is very different for different people. It's everybody's date before coronavirus and after coronavirus it probably took place sometime in March. Someday in March, your stock market portfolio blew up, one of your children got sick, your grandmother got rushed for a COVID test. My date was, I don't even know the date, I know it was last Thursday at 2:31 p.m. when my wife texted me that my 15-year-old son, who is near death in and out of emergency rooms all week, does not have COVID. Still bad he has pneumonia, we got to get him out of this, but for a week they were sure he had COVID. And that meant we were like a pariah in our lifestyle. I had a plumber coming to the house, do some work that needed to be done. They wouldn't enter the house. I had to tell them I have a sick child with definite pneumonia, maybe coronavirus. They go, sorry, see ya. And all of us, 4 kids, my wife and I, were blacklisted in a good way from people not wanting to come close to us. Now that he doesn't have COVID, we've got friends again. At least they're not running over to our house, but they're being more comfortable, like we're gonna not spread this disease. So BC and AC is different for everyone. It's defined as the day or moment in March that it really hit you, that this is something big that's going to change the rest of your life. What's fascinating, so BC came along. We've never had anything where we just ripped the whole economy and ended it, which is really what we did. Now that's what I first thought. I went through a whole week thinking everything's over. Can't go to restaurants, can't open my Planet Fitness gyms. My wife and I are franchisees of Planet Fitness. We love that business. Can't leave my house. And I thought the world and the economy has gone to a halt. I'll jump ahead. In preparation for this interview, I went and called lots of people and I asked some questions. And one of the questions I asked was, I called a multi-billion-dollar hedge fund private equity guy who has 9 major companies, all billion-dollar companies in his portfolio. And they make different things. One's in food distribution, one's in manufacturing. And I called him up and I said, so how are you affected, your companies? He said, they're all the same. People are working from home, but they're figuring out how to get the work done. And what's your sales going to be? Oh, normal sales, month of March. And he's got 9 companies at $1 billion sales level each. They're doing fine. And I realized that I'm living in a bubble. My service economy, I only meet people like Patrick. I see people like the restaurants who aren't serving me food. I looked at the whole bubble I live, everything got shut down. He has a $10 billion portfolio of 9 companies. It isn't shut down. And the world's still buying stuff and he's getting orders from China right now. They're back in business. So on a world scale, the world is on today, March 25th, very rapidly, well, it's not recovering, it didn't get hit, as crazy as it sounds. So I thought the world is over, most companies are down, that's not the case. The world is down and out for the service economy or for pieces of the economy that end up working together, like airlines. Airlines, by definition, airlines are not flying, or they're flying at levels with, I'm hearing 3 passengers on a plane if there are any people. And they're going broke really fast and they've already cut their flights by 50%. So they're going to need a very serious bailout, which just happened an hour ago. It was a perfect time. Today is the day for many people that the bailout was passed. The bailout is pretty amazing what they're going to do. I'll just run through a few highlights since it's so current. The bailout goes to someone like me who has to make a decision. We lost in 2 Planet Fitness gyms, we had $450,000 in monthly revenue. That went to 0 on March 18th when we closed our stores to protect our people, employees, and members from coronavirus. Now, that number disappeared. A couple of things have happened. One, the Congress has passed a rule that says we're going to give money to the state's unemployment. And that unemployment money will be at least what your wages were. In some cases, and I haven't seen the detail, it may have a minimum wage on it because the Democrats wanted to tap that on. So if someone's earning $12 an hour, they may get more in unemployment insurance for 4 months, or most likely will get more, all the way up to $65,000 a year than they were earning. Next one, SBA. I was just reading the SBA website. The Small Business Administration, again, the rules are not out on this. They say, Mr. Pilzer, you have a Planet Fitness gym, you're a franchisee for them. Great. We're going to lend you up to $2 million per separate business you own. And each Planet Fitness gym is a separate business. We'll lend you $2 million. You got to sign personally on it. I go, I'm not happy about that, but it's my business I'm saving. And you got to pay a 30-year payback with a 10-year call. So I say, okay, I'll probably take that money. Why would I take that money if I don't need it? Well, here's what happens. If you pay interest and principal on that money for several years, 2, 3, 4 years, the SBA says it was a good deal for you, Paul, to take that money. And you were a good credit risk because for 4 years you haven't missed a payment. We're going to forgive the balance of the loan. So my $2 million loan, which might have $1.5 million left on it after 4 years, if I run my business and I keep my employees and I do all the things the government wants me to do, they're going to give me money and then forgive it. That's a grant. And right now I don't have the terms, but my law firms are working through those documents to find out under what, because I have no interest in borrowing more money, piling on debt that I got to pay back in 5 years, at least at my age. When I was younger, that would have been a great deal. But right now, I'll take the debt if you're going to forgive the principal. And what we're seeing, same thing, airlines are going to get a direct grant. We're going to have something to cure this that we really never had before. In 2007, we didn't use fiscal policy, buy things, give money. We used monetary policy. We tried to fix the banks and keep them from going under, and frankly did a very good job. Without me, I should say. I was there in the White House to fix it in '87. I wasn't there in 2007. I applaud the actions taken in 2007. Now, we're doing fiscal policy. We're shoring up the banking system, making sure that'll be covered. The big thing in my life was that when I sell a share of stock, most people don't notice this. They think they put it in cash. No, they put it in a money market account that buys federal securities. That's not cash, because your TD Ameritrade or your Fidelity or your Vanguard could go under. Turns out the Fed last Friday, March 18th, is guaranteeing that cash. So they're guaranteeing the cash account. Sorry I'm jumping around here because thoughts are coming to me of my own businesses and my own economic side. So the Fed is doing normal monetary policy and shoring up the banking system. But what we're really doing here is fiscal policy. We're going to give every unemployed person full wages or more. And this time they're going to cover part-time workers. They're going to cover gig economy workers. They're going to cover contractors. But you better have a record. What we learned in Louisiana, you remember the BP oil spill of a few years ago? In the BP oil spill, the government gave roughly, I'm going to say $90 billion of aid. And if you owned a little bodega that made sandwiches for the guys going out to work on the oil rigs, you could go to the government and say, I did 80,000 in sales last year. I made 40, please give me my 80 or give me my 40. Now the government says, not so fast. Show me on your tax return that you made 80 grand. Well, I didn't report it all. Well, if you lied to the government 10 years ago, tough luck. Same thing here. In the bill that just passed Congress, you got to have receipts. So basically what you put on your tax return as your income last year, you can get out of unemployment insurance, even if you were never an employee, even if you were an independent contractor working in the gig economy. So we're starting to see we're getting smarter and smarter as a government in a good way to stopping fraud. And not that the fraud is so important to stop, we're trying to save the economy, but by showing Americans, we're not going to let you run away with the money. We're not going to let you just show up here and take it, even if you lied about it a year ago and didn't put it on your tax return. We're going to start with everyone's tax return. And that was a key part of the bipartisan bill that just passed. And I'm really optimistic. They're going to subsidize businesses. I'm hoping they'll turn to a business like me and say, Paul, don't fire your employees. Even though they'll make more money at unemployment, let me give you the money through the SBA or something to give to them so that we keep them employed. Because ultimately, every employee at a job has a skill. And the skill might be a very big technical skill, or maybe the 30 people who come in his business, God bless him, and say hello if he's in a dry cleaner. He's got relationships. We don't want he or she to lose those relationships. We don't want every employee to have to start over. So the big thing I see in the bipartisan stimulus package that just passed is let's try to keep people working at the company they were at. Even if they're not working, they're at home, because in a service economy, they can't work much. Not like you and I can work on our computers. Let's try to keep people at home getting their old salary so they'll go back to their old job. That's a real intention, not just give them money to eat. So sort of moving beyond this, because I'm going to really go by your questions, I'm starting to hop around to companies and individually look at who's doing what. And the timing for me was really good. I've been writing a book called The New Roaring Twenties about, watch this, why the economy is going to soar in the 1920s, and why the 1920s are the 2020s, and why the 2020s are going to be just like the 1920s, 50% growth in GDP, everything's great. My publisher called me up the day coronavirus broke. Are you still writing a book about how great the economy is going to be? So absolutely. But what's going to happen is all those changes I said were going to take place in 10 years, they may happen in 5. And the way we do work may be different. The way you and I are communicating now through a Zoom video link, it's not an uplight satellite, it's you and me, just with ordinary internet and laptops. And that may become the way everybody communicates in a much more serious way with screen share, and everybody's learned a whole new way to work from home. So as we put back together the economy, there's probably a couple of things that are going to be radical. What's going to be radical is, unlike the Great Depression, unlike 2007, it took 10 years for the GDP. From 2007, it crashed. It didn't get back to where it was till 2017. It took 10 full years, a U climbing up. That's not going to happen here. When we turn on the lights, so to speak, it's going to go, woo. I'm going to have members of Planet Fitness gyms. There's 15.5 million nationally, 20,000 in our 2 gyms. Our members of Planet Fitness, God bless them. It's bad weather here where I am. They're not working out. How fast are they going to come work out and bring friends when we reopen as a top brand in fitness? And so the first thing I noticed is those companies that can stay the course, keep their brand alive. We're doing lots of national advertising at Planet Fitness. We're doing on the web workouts. We're doing everything we can to keep touch with our 15.5 million customers. Because the more we can keep, when I say we, that's corporate plus 2,002 stores owned by franchisees like the 2 stores I own. And what we're seeing is the companies are going to rebound very quickly, because in most cases there's a pent-up demand. So the first thing, you can start making a list of what companies are closed, have effectively, not effectively, in Planet we really have 0 revenue right now. We stopped billing our members, and I'm going to have to come up with money next month or whenever we open to give them back for the 12 days we had billed them that we closed before the end of the month. We closed on March 18th. That's going to be through a lot of companies. And you've got to analyze each company. The biggest 2 things. The first thing that characterizes the recovery will be a V, not a U. It'll go straight up, just like it came straight down for many, many companies. The second thing that will characterize the recovery will be not everybody's going to recover. And some people, instead of recovering, are going to double. Right away, we're seeing now food service companies. Do you know what kind of money they're making in food service companies? They're open. In many cases, they have no competition and no one's eating out. So when you go to the supermarket, how much money did you spend eating out? You're now splitting that money into groceries and into packaged foods, and their business is soaring. Another one I kind of saw, I called a friend today who owns lots of skilled nursing facilities. Told me how busy he is. I said, you mean running your business? He says, I hate to say this, Paul, we're making money hand over fist. I go, explain that to me. He said, well, it used to be when you have an operation or you're very old and you're in a hospital, after a few days in the hospital, you get sent to a skilled nursing facility. And the FDA won't allow reimbursement from Medicare or Medicaid unless you've had 3 days in a hospital and met all these tests in the hospital to be moved to the skilled nursing facility. Today, they need these beds so badly for coronavirus victims. The minute your operation's done, cool off in the ICU for a few hours and wheel them next door or get them in an ambulance to the skilled nursing facility. In effect, a skilled nursing facility was built to function at the fraction of the cost of a hospital to be recovery long-term is in effect our hospitals today, because we have no other place to put people. We got to get out of the hospital. We just had an operation. So his business, which owns SNF, SNFs as he calls them, skilled nursing facility, SNF, that business is straight up now. And I'm finding as I'm hopping around on my phone, in this case, hopping around on video, and talking to so many business people, they're telling me they're all down. The ones in my bubble when I started making the calls are down. But outside my bubble, which is a lot of service industries, restaurant owners, people I work with, people like you who run seminars and conventions, and all of a sudden, or my friend Tony Robbins, there's no conventions and meetings, they're down. On the other side, so many companies are up. And certainly we see so many. Zoom Video, I knew, took off, selling video software. There's really quite a few more. I have another friend whose business is not at all impacted. He has $1 billion business doing air conditioning repairs. When your air conditioner goes down in an office building, somebody goes downstairs and it says, for help, call this number. That's his number. Then he sends an independent tech out there and fixes the air conditioner. That's $1 billion business, virtually no change. As many air conditioners as went down before, well, I guess a few might go down less because they're not air conditioning these buildings as cold as they did, but effectively no change. Another business, another person owns, I called today, does appliance repair. He's the number your line goes to when you call appliances by Paul. It's just a call center. And the call center answers the phone and sends a local tech over. The tech needs to be connected to a parts supplier. Those type of businesses, dishwashers are still breaking. If not, they're breaking more because people are home using them. So what I'm seeing is the world didn't end like I thought. And GDP is not going from there to zero. GDP probably dropped down 30%. But for the industries in which it dropped, nobody had a depression or a recession, a small push. If you drop to zero. If you didn't drop, I'm finding some of these companies didn't drop at all. I mean, they're still doing business as is. The really exciting thing is going to be how we're going to build out of this and what happens when we turn on the lights. And there we've got many different scenarios. The biggest one I don't know that I wish if you've got viewers or anyone wants to tell me, how does this end? In the sense says, do they have a siren go off? All clear, everybody come out of their home, there's no more coronavirus. Or do they say, if you have a strong immune system, you can go out 2 days a week, then 3 days a week, or go to restaurants. So we start phasing it in. I don't have an answer because theoretically, pandemics burn themselves completely out. They may not burn themselves out next month. Right now, as we write this video, our president is calling for an early release, saying the economic damages, the suicides that come from people losing their job, let alone their company, those are sometimes worse than the disease. And we might open when it's not absolutely prudent medically, knowing some people are going to get ill, but millions of people get a job and don't commit suicide and have a better lifestyle. So we have to decide that trade-off. But as we start to open now the economy, we need almost a hypothesis of what's going to happen. Is it going to be instant, where I call up, send out an email, tell 20,000 members of Two Planet Fitness Clubs, come on in, it's all clear? Or do I send an email that says, you're now legally allowed to come in, please exercise social distance to some extent, or we won't allow max members in the club, et cetera, et cetera. I don't have an answer to those things yet. But based on what's going to happen medically, we're going to see so many companies climb up. But you no longer can go to the S&P 500 and say, I'll buy the market, and the market will all go up. Because a significant number of those companies is going to be airlines. And what's the biggest determinant, I can already tell you, of airlines' profitability and value? Nothing to do with the airline. Tell me how big the subsidy is. The federal government's going to have to pay for all those missing passengers on all those empty planes, and they're going to have to pay retroactive. Because when Delta flies a plane empty, they lose $85,000 in revenue. That $85,000 is permanently missing. When they try to reopen and pay their bills 3 months later or a year later, they need that 85. So we're going to have to give a subsidy to the airlines, and the airline stocks, if you want to watch the subsidies more than the stocks, the actual companies coming back, because it's how much money they get. In so many other companies, we're going to see one company prospering and one failing. And it actually fits the book I'm writing. The book I have almost finished, called The New Roaring Twenties, says that it'll be the best of times and the worst of times in the 2020s. Before coronavirus, I wrote this, because some companies are going to be on the right side of technology. Some companies are going to be on the wrong side. And more important, we have technology to replace people like this with robots that we never had before. Now, I wrote that would happen over the next decade, from 2020 to 2029. Now, that could happen in 1, 2, 3 years, because when you're closed, biggest problem in a business retooling is, what do they do with their existing customers? What do they do with the current operation? It's like a car. I want to fix a highway. I could march in with a crew like they do in China and fix it in 2 days. But in the US, I can't stop the highway. I got to let the cars go. I got to come up with a service line. I got to come up with rerouting, because people won't put up with getting an announcement they can't get home for 3 days. Now, all of a sudden, guess what? The highway is stopped. There's nothing going on in so many areas of the economy. If I want to retool a restaurant and bring in new plates and new services, well, that's what we're doing at Planet right now. We closed the store, no customers. We're painting. We're doing all this stuff that we couldn't get to do in a 24-hour, 24/7, 24-hour open operation. Now, all of a sudden, we were able to get it done. And that's what's going to happen in a lot of this recovery. Companies are going to be installing, when they know they're opening, say, in September, a particular business, they're going to go like hell in June, July, and August, because once they open, they're always open. The supermarkets never close. And what you're really going to see is you have to analyze each company on an individual basis, no longer voting, I'm going to invest in the stock market. And you can't even analyze an industry and say these food service companies are going to do well. You have to look closer at the food service companies and say Walmart's going to do this, Costco's going to do that, and make your own decisions. In effect, I've told people who want the answers, they want to know what stock to buy. And I go, wrong guy, I'm a macroeconomist. I'll tell you about the whole economy and the whole world and how it's going up. You are a microeconomist. I'm sort of a microeconomist owning Planet Fitness and a bunch of small businesses. But the microeconomics is what you've got to study. Study each company and how it's going. I am rambling on and on here and just getting warmed. So let me direct this back to you with questions.
Yeah, so first of all, thank you, because I wanted a really good overview, because everybody's got a context for this. And we're in the midst of it, as you said right now. It's very fluid. It's changing moment to moment. The markets are just all over the place. They're down, 2,000 one day, they're up 2,000 another day. So things are really in a place that is, I think, destabilizing, because we don't have many reference points for this. I think your analogy is saying that our life is now defined by, BC and AC, before coronavirus and after coronavirus.
We'll always think of our life that way. You'll think of everything you do before coronavirus and after.
Yeah, and so now, there's people like you, that have experienced and others saying, okay, I was in the market, the market crashed. Some people maybe held and said, I'm going to wait for it to turn. Some people said, I'm going to, I sold, I couldn't take it anymore, too much uncertainty, I want to get more liquid. You said a few things along the way that I just want to let you kind of finish your full thesis basically on this, to now maybe dig in a little bit in some areas. One thing you said, I think, that kind of got my attention is saying, oh, some people think they're safe, they're in cash. They had $500,000 in a TD Ameritrade account, and they sold, they took their losses, sold out of the market, and now it's sitting in the account, but they feel like they're safe there. But you're saying that that brokerage account could fail and they could still lose that money. Is that accurate?
That was accurate last week on March 17th. I was not ready to sell all my securities and take my losses, which I since have done. And it's only today, March 25th, say 24th. But I was not, what happened until I determined on March 18th, the Fed issued an unusual pronouncement, which they've done once before. They said they're going to guarantee all federal money market accounts. So when you go to TD Ameritrade, it asks, what's your settlement account? That's the account you settle and put your money in. When you sell something, they put the money in, or you put it in to pay for things. That settlement account invests in short-term federal paper called a federal money market account. That's what you want. The reason is that the Federal Reserve Bank said, we will unlimited guarantee those accounts. Because what was happening is people who were smart and know stuff like me weren't believing it. They go, so I sell out my securities and they won't go back up. I get into cash. It's not real cash. It's real cash if I want it, but if everybody wanted it, it's not enough there. Now there is, because the Fed says they will print the money. But I asked a former chairman of the Federal Reserve Board of Governors this morning, and my question for him was, I saw the pronouncement on March 18th that you guaranteed it. What are you going to do next week? He says, oh, it's going to stay guaranteed until we're out of this. That's my problem. But any point you want, you could cut your guarantee. He says, yeah. I said, that's not a real guarantee. You're guaranteeing my money if it's in a TD Ameritrade account, it's in a federal money market. But you tell me at any day you wake up, you can stop the guarantee while my money's still there. Whereas when the FDIC guarantees my bank deposit at a savings bank, they're stuck. They promised me a guarantee. It's on my passbook. I got it. So the Fed for right now is guaranteeing your money market. Now, of course, the next question you're going to ask me is, Paul, where's the safe place to put money? There is none. I mean, if you're really panicking, you can buy gold and bury it in your backyard. I'm not being a joke here. That's it. But once it's out buying a precious metal or buying a business and running it, and of course your risk is, who would have thought they'd close all the gyms in the United States? Taking 30 million gym members and kicking them out, which they did, or close all the restaurants. I mean, so there really isn't any place safe anymore. What it really tells us in a beautiful way is we're all in this together. Because even if you can get out, you're not out, because there's no place to put the cash. And there's no place to put the cash that's safe. Now, when I say no place, for most people, they can put it in a bank account and they get $250,000 FDIC deposit insurance. That's safe, because the FDIC is backed by the full faith and credit of the United States, even if everyone runs to the bank. But you might ask, what if I have more than 250? I learn new tricks every day. My banker called me before I called him, and he said to me, Paul, I need you to come by on your various bank accounts and fill out a new form. I go, which one is this? He said, we're going to add your children as beneficiaries. We're not giving them any money. We're just taking your bank account that on the deposit slip and says, if you die and your wife Lisa dies, in this bank account, the kids get it. I go, what does that do? Increases your insurance by $250,000 per person. So we put 7 people, a whole family, including their uncle, my brother-in-law, on deposit slips. We didn't give them any money. We said if we die, they get that money. You've seen that form a million times. That ups our deposit insurance from $250,000 per account to $1,750,000. Big difference. So
you
got
also
to
just open up in that, Paul. Could you also just open up separate accounts and just put $250,000 in every account?
Yes, you could do that. It's by social security number. And then the same thing for companies. It's by the EIN, the employee identification number, also known as the taxpayer ID or social security number. But you may not want to do that. You can just go to your existing account, Patrick, that you have, and add, if you die, kids' names.
But wait a minute.
You don't have to change your account number or anything you do.
But are you saying that if I have 5 accounts with the same social security number, it's still only $250,000?
Yes. Yes.
Okay. So then there's no benefit just to open up multiple
but
accounts.
You bring up a good point. If you want a lot more insurance, go to different banks. You're insured for $250,000 per social security number per bank or financial institution, not per account. So lots of different schemes. Your banker will know them better for you. What we're seeing, though, is when I start to look at some of the past numbers, and I'm just pulling these now, these are some incredible things. Casinos were so down in 2009 from an operating standpoint. People weren't gambling, they didn't have money. In addition, they were leveraged. So they were financially leveraged. Operating leverage by just fixed costs, paying for all this money and nobody's gambling. And they were financially leveraged because they borrowed money to build these buildings. They were real estate. If you bought a share of stock of most casinos in 2009, guess how many times it's up today? 40 times.
Wow.
And like in less than 10 years, 40 times. That's like Apple stock. And that's just on a casino. And what we're seeing is, because the business was so leveraged when it's down, that might be, I'm not telling you to buy casinos, I'm telling you to look at that example. That may be even greater today, because the casinos went down in sales in 2007. They went to 0 in sales in 2020. That's really scary.
So now, this I got so many questions, and we're going to maybe try to go like lightning round on them if we can. So you said that you personally sold out and took losses, but you think the economy is going to recover straight up. It's going to be a V.
Right.
So are you looking to use those losses to offset other gains? Or
here's what happened. I'm devastated in 2020, here like everybody else. My portfolio is down millions of dollars, and I get a call from my CPA. He says, oh, by the way, we have to file your quarterly estimate. And you sold a company in February 2020. Congratulations, Paul. You owe the government now 30% of it. I live in a state that doesn't treat capital gains differently than ordinary income. So I owe 30 cents on the dollar from the price I sold this company for, assuming I have no basis in the stock. Now, that's just crazy. I go, I just lost that money. I lost 3 times that amount of money. No, Paul, you lost that money in March 2020. And you haven't lost it till you lose it, till you take the loss. But you lost the money, you made the money on the capital gain in early February 2020. So you have to pay 30% of that now to the government. I said, I need this cash to keep all my businesses going, to pay for my employees. So they go, okay, so take the losses. So I called up Vanguard, my advisors at Fidelity, and what they said is, what you really should do, Paul, since you have losses and gains as an entrepreneur, and not everything works out, some are losses, some are gains. But right now, it looks like you have gains in your private equity companies, which you're not selling, but you will have gain. Tax losses are carried forward. You can carry them forward forever. A capital loss, or short or long term, gets carried forward forever. So if you think you're ever going to have gains, the right strategy is to do what I did on Monday of this week. I sold every single share of stock in every security account I own. And just because I got into it, I decided I closed out my IRAs, which didn't have the tax advantage. Once I sold it, I took a huge capital loss. I don't have to pay taxes on capital gains now for a while. What am I doing with the money? Buying back the same stocks. And I'm buying back the same stocks. And today the transaction cost is nothing. I remember when they lowered it to $8, it doesn't cost any money to come in and out, provided the stock price stays the same. And I'm of a belief, as an economist, I usually say there's as much chance it goes up as it goes down. In fact, mathematically, the closing price of every security is that price that half the people who trade in it think it's going up and half the people think it's going down. And the price moves around until it's 50-50. But right now, most people say, I don't know. I have to stay out of buying that same stock back, called the wash rule, for 31 days. Let me explain that. I go to take a Vanguard fund, a mutual fund that I like of Standard & Poor's 500 called VOO. VOO is a $60 billion mutual fund, one of the largest of all the stock market, top 500 companies. In VOO, I sell it, and I take a capital loss from the price I bought it for. Now, if I buy it back within 30 days, and actually 31 including settlement times, they say you didn't sell it and they don't allow my capital loss. I have to sell it, keep it sold for 30 days, and then buy it back on 31 days. And they call it, I get the loss. You see where I'm in the same position?
So you, right now, you believe that the economy is going to recover basically at an accelerated rate in the same way that it collapsed.
Except, yeah, but I don't know, absolutely don't know when, but absolutely.
So we don't know when. In your particular, and thank you.
That's the total economy.
That's the total
Individual
economy.
companies are going to go even faster or not at all, based on what they make.
Yeah, there's going to be winners and losers in that mix.
Massive.
Yeah, and now you also, and then thanks for incidentally sharing, hey, these are the kinds of maneuvers you're making personally. You're saying, I got some windfalls that came in. I just had a business that sold, that brought in a lot of money. Right. At the same time.
And more important, my other businesses, senior housing, Planet, one day I'll sell them and they're going to be sold at a gain. I don't know when, but they're going to sell at a gain. And I'm going to have to pay 30% of that gain, which is my federal and state capital gains tax. Go ahead.
So with that, it's incidentally interesting. So you're invested in senior housing, you're invested in franchises, in Planet Fitness, which is a cash flow thing for you. You've got money in equities, that
Mainly
you have.
venture capital funds, which each one has 30 different companies.
Yeah. So you're in a lot of things. So, but what's interesting is how you're using this circumstance to basically say, oh, I got hurt bad by the equities drop, and I think you said it's in the millions of dollars. This was a tough thing, but I've got all this other capital gain over here from things that have happened,
or capital gain coming. Most people don't think about capital gains and most people don't analyze the tax strategy in capital gains till they have what? A capital gain. Right. In this case, there are things you own, when you sell your house, go up as a gain. And now's the time to take the loss. And if you like your stock market positions, just buy them all back.
And that's the interesting, because I was going to say, if you think there's going to be a pretty steep upward trajectory and recovery, and especially with what you're seeing the government doing in the bailout package, but you're personally, and this is why I want people to understand, you got to read your personal circumstances. You're saying, I want to take these losses now, and I'm going to wait 30 days. Those losses are useful to me, very useful to me on a tax basis, and then I can rebuy 31 days later and start over again in the market.
Better than that. When I sat with Vanguard and Fidelity, they said the fund you just sold, you can't buy that fund for 31 days, but you can buy a virtually identical fund that has the same stocks, but a different name or a different strategy. You can buy that fund tomorrow. So you can sell in the morning all your mutual funds, buy back a mutual fund that has almost the same holdings, just a little different, under a different name, maybe a different sponsor, and it's as if you sold it and took the capital loss, but you stayed in the market if that's what you want to do.
So Paul, can we do an example of this? I just want to kind of understand what you're saying, because I knew about kind of the 30-day hold to be able to realize the losses before you can buy again. But you're saying that you can rebuy, you can take losses, but buy different stock right away and it's like starts a new clock ticking. Can you give me an
Absolutely.
example of maybe how that works?
Yeah. You own shares in a mutual fund at Fidelity. Let's call it Mutual Fund One. And it buys the Dow Jones average. And it has certain rules for buying them, and it's got a portfolio of Dow Jones stocks. And you own that at Fidelity. For the first time in your lifetime, this may be first time in your life, depending how old you are, you've never seen a market crash like this. So the stock you bought in that fund, the stock, it's an ETF technically. The ETF you bought in that fund that was $50,000 is now worth 30. And you still like that fund, even though it crashed down to 30, you think the market crashed, it did good. So you sell that fund for $30,000 today that you paid 50. You lock in a capital called capital loss, carry forward forever, which can offset this year's capital gains or anyone's down the road. You're really crazy not doing it, because if you think you're going to have any capital gain, you should lock that in. And what do you do with the money? Buy back the almost identical fund. Buy another fund, maybe by the same fund management team, maybe sponsored by Fidelity, or just individual stocks, the total of the fund. Buy that back now, so you're still in the market. You've only been out of the market 3 hours. You sold in the morning and bought it back an hour later. But you've locked in the tax loss. And the next 50,000, or in this case, the next 20,000 of capital gain is completely covered and shielded from you. Most people never look at this because they've never had buy stock and this much of a loss right away. It happens over decades, and it rarely happens. It happens with individual stocks. It never happens that some sectors of the economy completely go to zero, driving those stocks to zero or close, and driving mutual funds down 20, 30, 40%.
Wow. And again, everything is contextual. You know, you have multiple business investments and ventures. You have gains coming along the way. You know that this market is down. And
starting with my house and basic business assets and certain other securities, I have things that I'm sure will yield a capital gain, even if they go down more.
So you looked and said, and this is the interesting thing. You said this market steep decline, falling off a cliff, basically, is an opportunity for me right at this moment. And you're going to have now a tax loss that you can carry forward whenever you need it. And you can go back into this market and ride it back up again.
Absolutely. So if you like the stocks you own, great. Just think of raising the basis at which you own them by selling them at a tax loss and then buying them right back or equivalent. And that qualifies for the 30-day. The rule is if you buy a stock, sell a stock, have a capital gain or loss, and buy back the same stock within 30 days, you didn't sell it. So sell something, buy something similar, but it doesn't apply to derivatives on that stock like options. And it doesn't apply to mutual funds. As long as they're two separate mutual funds, you can sell one and buy one. All of this fits under the area that everybody has to do now, and it's tough while we're still crashing, under the area called rebalancing. And rebalancing is just what it sounds like. It's look at everything in your portfolio and say, is this the right position for me now? And what you often see is, wow, I left all this money in equities, but next year my son's going to college. I don't want to gamble his college education based on how the stock went. I should have rebalanced it last year anyway and converted that money to bonds or to CDs even. So he definitely has the money. I promised him to go to college. But most of us get into an investment strategy or we manage our own account today and we don't think what has changed in our life since we opened the account. Do we want to be in more bonds and more equity? If you were in a 529 account, that's a college savings account, most good managers did that automatically. They put you in equities at when the kid's age 1, 2, 3, when you open the 529, because they want long-term growth. They're not worried about liquidity and sales. Then they start moving you to bonds when he's 14, 15, 16. When your daughter or your son is going off to college, you want to make sure that year it's going to be there. And that rebalancing we're sort of used to, but now we need to rebalance with tax strategies. You really need to go through everything in your portfolio. But first you have to go through, what do I want to do in my life? What obligations are coming up to my family, to my children? Now, how do I match my portfolio to meet those obligations? And one of them is, how do I minimize the capital gains I'm going to have to pay when I go to harvest all this?
So now based on this, let me ask you this. Do you agree with the statement, some people through this whole thing that's going on right now are going to go broke and some people are going to get very wealthy? I'm of the opinion that we're going to see an enormous wealth transfer, through this whole coronavirus scenario. what do you think the people who are going to actually get wealthy, or it's actually going to up their personal wealth through this process, what things theoretically do you think they're going to be doing? What's going to separate the two?
Well, let's start right now and later on. Let's call it. So right now, everybody thinks the market's down and all the stocks fell. The market went down. Some of those stocks I already realized shouldn't have fallen. They're in food distribution. They're in SNFs, nursing homes. They're in businesses that are being flooded with new customers coming in right now. And they're helping service, God bless them. Employees are taking risks. Walmart is going to go straight up. I mean, Walmart can put in the controls, manage through the crisis, deliver us the food we need, and boy, are they going to have a profitability increase. And we're going to see some type of adjustments for rent and interest rates, which are going to lower Walmart's costs. So Walmart, which dropped initially when the market went down, is doing very well. And that's just initially right now. I call them companies who immediately are going to improve in sales. It's kind of sad to say this because a tragedy occurred and it drives their business up. And it really is all supermarkets and food distributors versus restaurants. And some of that will be permanently changed because people are learning how to cook a lot more. You know, a lot of people are eating every meal out. And all of a sudden, they're home now making more meals. When they go back after coronavirus, of course, they'll run out to the first restaurant that opens. But eventually, I bet 2 years from now or 3 years from now, when pandemic is long forgotten, some of those people are still cooking more meals than BC. So 3 years from now, you might say, I'm making more meals AC than I did BC at home. Or my children sit around the table because I got used to cooking during the time of the quarantine. We're also going to know how we change our lives during quarantine, and that's going to change patterns and behavior. Now, once we start a recovery, it's going to be even more interesting. Because when we start our recovery, those companies like Planet Fitness, you get to open up right away, boom, they come running back. All the local restaurants that God bless them find a way to survive, pay their employees. And I really worry about that. I'm sorry to say this, because so much of their employees is cash income. A waiter has an expenses with his family. It really isn't his fault that he got a paycheck and he got tips in cash sometimes. And it is his fault he didn't report them. Well, he's not getting any of those tips back unless he put them down on his tax return. Now, I know that tips at Starbucks and certain companies, they collect, record them, make everyone add to their paycheck because they share tips. So it's different for every restaurant chain. But what we're going to see is that the recovery is going to be administered in certain ways that's going to help some companies and hurt others. We don't know. I know the airlines got $50 billion today. I don't know what that is. I don't know if it's too much, too little. But if I knew a lot about airlines, I'd be taking out my pencil and going through each airline's balance sheet, which is all public, and then make a judgment call of which airline's going to get enough money based on what gets subsidized and which doesn't. You're going to have to analyze each company. You'll do what my wife, Lisa, calls common sense investing. She goes to a store and they treat her real nice. Then she goes back. What does she do the third time? Looks it up on the stock market, finds out who owns it, says, common sense, they're doing something right. They got me back as a customer. I want to look into that company. And common sense investing will be king in the next decade as we reopen companies and you have good and bad experiences as they retool themselves. It's going to be an interesting scramble because I believe collectively in the 2020s, this is the work I've been doing for my new book, we're going to see a huge demand for skilled labor. Much, much more than we ever did with huge increases. But we're going to see a huge decline in the demand for unskilled labor. And we're going to see that because every new company, every new machine, every new factory is designed to have less and less and less labor. And they're going to use this opportunity if they're closing for quarantine to put in the new machines, to put in all the equipment ahead of schedule. Because it's a lot easier to do when you don't have customers walking around the floor to retool your place.
So Paul, from a macroeconomic level, looking at, saying, hey, there's, it's kind of like, you're making me feel very optimistic, saying, we're going to go through this. The economy tanked so fast, it was startling, and it's going to recover very quickly. It's not going to be a depression. It's going to be a V. So, okay, wow, okay, that's good. It sounds like we're going to get back to, good times again here pretty soon.
For some people, keep in mind, before this happened, we as a nation were focused on social equity. I've written a lot about Schumpeter. And Schumpeter is the guy who created creative destruction, how new technology displaces old technology, and how globalization, someone makes a part better in another country, bingo, Amazon delivers it the next day, and your workers are out of work. And Schumpeter said how new technology causes the economy to grow. This was a book called Capitalism, Socialism, and Democracy. And that what happens is in a democracy, new technology comes in, the company gets more efficient, makes a lot more money, and its skilled employees go up. But its unskilled employees go the other direction. And the rapid technological change puts tons of people out of work. So the people vote in socialist policies. And this book, which was Schumpeter's last book, it's called Capitalism, Socialism, and Democracy. In a democracy, people get so fed up seeing people they know, their own children. And one child's making 300 grand a year, and one child can't get a job. They both went to the same schools, but one got a starting job with good technology, and one got a starting job with technology that's no longer used. So they're obsolete at 28. So what happens is socialism is the natural result. People vote in socialist policies. And unfortunately, I was proven right this year when a leading Democratic candidate, who was actually the leader at one point, Bernie Sanders, ran as a socialist. That used to be a word, you'd get rocks thrown at you at a union, Democratic union meeting if you said you were a socialist. That was the same as being a communist. Now, socialism is an acceptable term for a good part of America because so many people were displaced. Well, whatever happened to lead us to social equity and wanting to treat people fairer and frankly wanting to take care of people? I'm a huge pusher of universal basic income. And people used to criticize me. I must have had 30 calls from this week saying, Paul, now I get it. Because I've been modeling the economy and how we can give $1,000 a month to everybody and how all of us would be richer if everyone, and you, including you and me, got $1,000 a month base without embarrassment or shame. It was your ticket for living in the United States. You might pay 5 times that back in taxes, but you get it and you shouldn't be embarrassed about it. And I call it universal basic income. And I would talk with Andrew Yang about this 3 years ago before he ran for president on it. And this is a major theme in my work and speeches for the last few years. It's like barbaric and stupid that we let people out of jail, that no one will hire them when they've been in state prison and not give them a minimum $1,000 a month to eat. Well, of course they come back. They're hungry. You have to come up with a universal basic income. Well, getting back off UBI, we were heading towards a more socialist state. I would call it, as a former Bush appointee, a kinder, gentler nation to take care of people anyway, and we can afford to do it. This is going to put that on spades because now everybody needs help. And everybody who gets that unemployment insurance of your existing, that just passed this afternoon, is going to be less critical of giving it to other people, or a prisoner getting out of jail, giving him $1,000 a month. We're all going to be a kinder and gentler people because all of us, including me with my small businesses, are about to get government subsidies. The government is saying to me, Mr. Pilzer, don't fire anybody and I'll pay you.
But now, to my point, the question I have is, there's got to be some sort of consequences to $2 trillion of stimulus that has to have an impact somehow. It can't be like, oh, you know, the government can print this money, inject it into the system.
Theoretically, if we're printing $2 trillion and our economy is $20 trillion, we just lowered the value of every monetary asset by 10%. So if you have a stock or a bond that you were planning to one day sell and send your kids to college, its buying power went down 10%. So yes, a big consequence, 10% less value. We're going to bet that we can grow our way out of this. That when we retool the economy, which I'm telling you, all the technology is there to do. The amount of technology, that's what I just finished my book on, the new Roaring 20s. All that technology and all that growth was in the economy ready to happen. What I call RITs. And RIT is a ready to be implemented, RI, technological advance, T. Some better method you haven't yet adapted. That's going to get put in spades in the next decade. So we're ready at a position where our economy is going to grow and we're going to put in new technology. But initially, you were absolutely right, Patrick. Look at all your money and your assets. We print $2 trillion. Everything you have is worth 10% less because now there's that much more money floating around.
And I guess you would make the argument that having everything worth 10% less is better than the alternative. What would happen?
The alternative is we can't afford to stop so many supply chains. We have supply chains for medicine that you don't take and you die. We have half our population, God bless them. They're doing fine, but without that pill, they can't see, speak. I have crippling migraines that are stopped by an injection I take every month. I panic. You want to say me shake? Think that drug doesn't come in. And I'm already calling my pharmacist months before I run out to make sure that supply chain is going to stay. All of that is necessary for the government to keep running. And we've got to keep the government going. We should probably pick up another topic here. Which countries are going to survive? I'm embarrassed to be an American at this moment because right now, America is going to come out of this so much stronger than every other country because we have the strongest political system and the strongest military.
Why does that embarrass you?
It embarrasses me because I don't want to, it's like I conquered these nations and I'm saying to someone in Indonesia who's got $5 million, literally and figuratively, in seed corn to plant crops that employ 300 people picking them. And he takes that 5 million and says, I'm running to the US and I'm buying US treasuries because I need to keep this money safe for my family. 300 people now don't work or eat in Indonesia. And when I see all this money flooding into the United States, which is what has happened right through this. Now, it isn't flooding into the US because we don't have coronavirus, right? It's not flooding into the US because our GDP is going like this. It's flooding in because politically, we're the strongest nation in the world, most stable. And more important than that, militarily, to back us up, if the world goes to hell in a handbasket, and this goes into a bad situation, which military is the strongest? God bless it, it's ours. So I don't like to see it, but I like that. But I don't like to think of money and capital flowing from other countries where they need to recover into the US. We now have negative interest rates. What that means is a person comes in from Venezuela who had a business there. He goes to the Treasury window, literally or figuratively, clicking on a screen, or literally can go to Washington, to the US Treasury, and say, I want to buy $1 million bond that in 10 years, I come back here, you'll give me my million. Great. They used to say, give me 500 grand, that's called a discount. Treasury gives him 500 grand. He gives the Treasury 500 grand US. We Americans are 500 grand richer because we will spend that money. And then that money grows up to $1 million, and it comes up, gets his million in 10 years. Now he's going to the window with so many people hitting the Fed discount window. He's saying, I'll pay you $990,000, and in 10 years, just give me back $1 million. And the guy next to him goes, no, I'll give you $999, and you pay me $1 million. And the next guy says, I'm not here to make interest. I'm here just to put my money away safely in the US. I'll give you $1.1 million, and in 10 years, give me back $1 million, America. Because he just wants it stuck in America. And that's what banking used to be prior to the 18th century. I live in a ski town, Park City, Utah. You used to go up and down Main Street for the bank with the biggest guard. And you took the gold you hard earned in those mines and you put it in the bank with the biggest guard that you felt was safest. And you never asked for interest. When you came to pick up the gold, they kept 10% for storing it for you. It was negative interest. We're back to that in many cases. We're writing economic theory places we've never been before, from working with bank regulators, Federal Reserve, FDIC, how we insure people's money, how we keep a run from going on anybody's money. Everything is up for grabs. Any
concern, Paul, though, for any concern for an out of control inflation or other consequences from this seismic action?
Right now, no. All I do every morning is talk to government regulators, other economists, and I'm frankly pleasantly surprised. I was much more pessimistic of how our banking system would handle this 10 days ago, leading to me selling every single piece of security, not just what I needed for tax losses, but converting everything to cash and making sure that the cash was guaranteed by the Fed on top of Vanguard or Fidelity, wherever I put it. So I was pretty conservative. As of today, remember we have to start out everything. They should put the date and time on every news clip because it changes by the hour. But as of today, March 25th at 5:30 p.m., I'm very, very impressed with the way the circuit breakers work, from the stock market circuit breaker that shuts down the market when it drops a certain point in the morning or whenever it opens. Everything is working to the way bank deposits. Right now, I had a meeting this morning to discuss what the banks need, and we determined we don't need to figure out now the right way to subsidize the banks because they're not in trouble. This is not a monetary policy problem. The banks right now are surviving. They won't be if all their companies start going out of business, but the systems, it's almost as if the pain that was so painfully created in 2007 and 8, the economic pain on top of a lot of other pain that was created in 9/11, we learned something from that. And some of the same people who learned that, or in 1987, the Black Monday, we've learned, and Black Tuesday, 1929. We learned a little bit, and all of it's working right now for the first few weeks of the after coronavirus debacle.
So now, I guess getting back, I've kept you for quite a long time because I can listen to you for hours talk about this. And incidentally, I've had people talk about you got to go into gold right now. There's going to be inflation. Gold is your best bet.
If there's an easy way for you to get to gold, I would do it. If I had an easy way, a hole in the backyard that you didn't know about, and I could The problem is I can move $10,000 in gold. I can't move millions in gold without my neighbors noticing the excavator. It used to be in 1961, my neighbors on both sides of my house in Long Island built bomb shelters. And when I asked their kids, they both told us they were building swimming pools. And the reason is my dad said they don't want to admit it's a bomb shelter because they're afraid we'll run over if a nuclear bomb hits and bang on the door. But there were many people who did that. Looking back, it was a foolish strategy. If there was a nuclear bomb in Long Island, New York, it would have been a good strategy. Same thing here. It's a lot of work to go move gold and put it somewhere, and you can get easily robbed. Right now, I'm very surprised. I scan the news for shootings. We had a couple of shootings called a mass murder, if it's 2 or more, a day. I can't find any. I don't know if they're being blocked out of the news, or maybe the shooters are hit by coronavirus. Some strange things happening there. I mean, it's interesting. We have a news blackout on anything but coronavirus right now.
Yeah, I think that's all people really care about, and you know, the news, they feel like they're going to lose traction if they're not talking.
They care about politics. We're in the middle of a presidential election, and all people are caring about is coronavirus. And what's going to be the biggest debate once we have a Democratic candidate and a Republican candidate? You tell me what is the number one issue they're going to debate at every single meeting.
Yeah, how well this was all handled.
How this was handled and how one guy would have handled it differently. And that's going to be for the American public to decide in November. But the coronavirus is everything right now. That's why I say you will always know where you were. Someday in March at an exact time, a time will be where you were, I call the beginning, when BC, before coronavirus, became AC. Some event happened in your life. That event triggered everything. You'll remember it all your life.
So getting down now closer to the ground, let's say that I'm somebody that I'm a professional, you know, a dentist, a doctor, or, you know, somebody who was a business owner, made decent money over time, put away money in savings, and you know, did sort of the standard stuff, certain amount of, you know, diversification in the portfolio, which again, a lot of experts say that's a bad idea, but let's just say that I'm doing the standard stuff. And now I see the whole thing get rocked. But I have some liquidity. So if you're me right now, what would you be thinking as far as what to do next, if anything?
It's time for rebalancing. Before, you only rebalance when you change your lifestyle, or a kid went off to college, or you got married or divorced, etc. Now it's time to look at rebalancing AC after coronavirus. So the first thing you got to do is a financial plan of what is money? Why do I have money in the bank? Because I could have spent that and bought that extra car, bought that extra vacation. I deferred gratification to save money. That's why it's in the bank. For what reason? There was an original reason you started out. What's it today? Oh, the kids are done with college. You might say, I can spend more of this. Or I want to invest this in bonds, which are safer, earning low interest. I don't need it to grow. I got enough to make it to age 95. Therefore, I'm going to invest it in bonds now because I don't want to take the risk of the market again. So the first thing you've got to do, or the most important thing, is define your financial goals for how you want to live till death. How much you want to live in your family.
Let me ask a question. And maybe this is what I'm getting at. Do you believe that there's an imminent, and when I say imminent, I'm saying within, you know, the next 30 to 60 days, so let's call it June 1st. Do you believe there's some opportunities that are very near term that could be really beneficial? I've taken some losses, but now there's other opportunities I could get ahead with. Do you believe that there's anything in the coming month or two that I should be taking a hard look at, or should I be stepping back a bit, let things process a little more, think about my load balancing, and then act?
Well, first, every company, I don't know if you want to play with shorts. First, on the upside, every company you buy food from to stay alive, housing, any issue, is going to make a ton of money. Money that they've never seen before. Because all of a sudden, it's like all the sales of restaurants just shifted to supermarkets. And short term, their stock's going to go crazy. And it's going to go too high in some cases. And if you can watch that company literally by wandering into the local Costco, if that's who you're watching, or Walmart every day, and of course going on the web and looking at stores and counting their openings and seeing their sales and calling up their analysts who follow it. So every company that was, let's call it, properly valued is now misvalued. It's too high or it's too low because an earthquake of changes just hit it. So that's just on the companies that exist today. Within business, you're going to see so many people reevaluating their life. And the amount of small businessmen who say, I'm retiring next year, retiring next year. I'll sell my business next year. I'll sell this house I'm not living in too much next year. Talk to them this year. You're going to find huge changes psychologically among people who own things from businesses to houses. And just because they said no to you 4 times in a row, call them now. And the first guy in may get the sale at a good price. So you have to look at the things that everybody's psyche has changed, particularly among old people, particularly when we have a virus that geometrically, exponentially attacks old people more. That changes the whole old people's mentality. Those who had money and they thought only to last 30 years now think, I might last 5 years. Or, wow, my best friend just died from coronavirus. I got to get a grip here. And he was only 60. So everything is changing, creating enormous opportunity just because that's what comes from all changes.
You have a lot of background in real estate investment. That was a big part of your life and career. How do you think this is all going to impact real estate?
It depends on what kind of real estate. And we especially learned that with WeWorks when they tried to turn real estate, not yet successfully, into a high-tech business. But most of real estate is really technology. I'm heavily invested in 52 large projects of seniors housing. And this is housing for people who all pay cash. They basically sold their home, moved to Florida, but they want an apartment or something back in Allentown, Pennsylvania, wherever they grew up. And so I've been investing in senior housing, which has been a great business. I've been terrified of it this week because every one of my customers in senior housing, I'm shocked. What happened? Yesterday, I had a board meeting of one of the billion-dollar funds I'm involved in, that I'm an investor and a board member in senior housing. And I expected them to tell me, we all have coronavirus. No. First thing they started with, in all our 52 projects and tens of thousands of employees, 2 employees have coronavirus. They're almost all better. They're home. Wow. I said, you got all these old people, tens of thousands of them? No one got coronavirus? He said, we're at the top of the thing. In order to just sell our normal senior housing, we have super cleanliness anyway. We're super clean. And now we're making that a big selling feature. Before, we never wanted that. It was always part of the due diligence when someone moves into senior housing that his kids make sure it's a clean place. Now they want to know the cleanliness before they know where the bathrooms are and all the other items. So senior housing, the most interesting item is I took a look at all comments who have come in to the place they can write in. And most of the comments, definitely there were comments of, I'm worried about coronavirus, I'm worried as my father's safe, etc. For every one of those, there were multiple. Thank you for running such a great senior housing. We don't know what we'd do with 4 kids at home if grandpa still lived with us and the kids couldn't hug him or see him or knew that every time they went out, they might kill him. We're grateful you have this senior housing project. So if you asked me this question yesterday morning, I would have told you, wow, Patrick, I got so much money in seniors housing, I'm in big trouble. I'm a board member representing other people, and I got millions of my own in it. Now, after this board meeting and reading all this, I said, net, I think we're up. I think more people are going to say, let's move grandpa out of the house because it's not safe with kids coming in and out every day and their friends coming over. And he doesn't want us to change our lifestyles. Grandpa doesn't want us to have kids who never go outside. He'll move to the senior housing. Now, we're in the upper side of senior housing, all cash payers, meaning no Medicaid, and that's our market, which has been the sweet spot for investing in senior housing. I can't talk about the ones that are government subsidized, but what you're seeing is everything's changing, and coronavirus is not necessarily an automatic negative for every business like real estate, and certainly it's going to change the amount of office space we need. Have you ever worked online this much and hopped from meeting to meeting instantly? And this is going to change your faith in online work. So already, WeWorks might have just been a few years too early of this work-home conundrum. I'm sorry, work-home continuum.
Well, I gotta say, Paul, more than fascinating, and your views on the macro level, are, I think, extraordinarily informed. Just from not only your experience, living through many types of economic change, but also your background and your academic background and your work background. All these things come together so you can really comment on this in a very unique way. There's certainly, right now there's so much, I guess I'd say, contradictory thinking, which, is to be expected. Different people have different points of view. A lot of people have confirmation bias. that they're trying to now say, I knew this economy was bad. It was a fake economy. It was built on debt, which you hear a lot. And one little thing or one big thing comes along and the whole thing has to collapse because it's not a real economy.
And this had absolutely nothing to do with any of that. This was a disease.
Yeah, well, but basically saying it could take a disease or some other thing to take a fragile economy and have it crash.
Right.
But your view is, no, this was, and then maybe, I don't want to put the word in your mouth, and this is kind of a summary. Was it your view that the economy was legitimately strong based on its fundamentals?
Right.
Up until
Great question. Prior to coronavirus, I believe that there were two theories about the economy. One was we're at its peak. We've had the longest run we've ever had. We've had an inverted yield curve, all the signs of a major crash coming. And all those people who predicted it look very right now. But I submit they're wrong. They were right in predicting the major crash was coming, but not for the reason they predicted it. And without coronavirus, I don't believe the crash would have come. I've been analyzing company by company. The stock market got so high because earnings got so high, because companies were laying off more and more people, and we were replacing machines with more and more people for unemployment. Despite our president's claims of great unemployment, remember that when someone hasn't found a job in 6 months, we take them off the unemployment rolls. So by my estimates, 30 million people in the last 10 years were removed from the unemployment roll. You add that 30 million and you're back up to 20% unemployment. And all I have to ask you is, remember your life before coronavirus. Did you know people in their 50s who would love a job and don't have one and don't have any work? And they don't count as unemployed because our government doesn't count them. In other words, our economy got so strong for a bunch of factors that hurt the lower ends of our economy. No, not because we didn't like their race or their religion, that because they were on the wrong side of technology. They learned this and the company bought that. Now, it looks like all the people who had these models to predict the crash were right like they've never been right before. And for the next 10 decades, we're going to hear, my father, my grandfather, or I personally predicted the crash and took all my money out of the market. Wrong. It happened anyway. It's like an asteroid hitting us. It's really a great analogy. It's really like an asteroid. There's nothing we could have done or did do that caused this thing. This is a true act of God.
And then the premise would be, because the economy was strong prior, that's why it's going to be a V. It's going to get right back on track.
Thank you for finishing that thought. Very important. That's why it's going to climb back, because the companies this time of the price, they weren't just bidding up the price of a house back and forth like in 2007 and the crash came. They were having earnings. They were earning dollars. You could buy a share of that company and you could collect on a $100,000 investment, 2, 3, 4,000 years, whether the company went up or not. The company was really well. The Fortune 500 have retooled themselves, as has all companies in America. They go out of business quick if they're not. And we're so strong, and we will be that strong again collectively. We still are that strong in companies still in business, like in food distribution. In fact, we're much stronger because they're using all their technology to move much more goods than the average Walmart was ever built to distribute. And now they have to distribute it cleanly, and they're still way up in sales. So we were so strong before, that ameliorated the decline, but we've never had, we need a new word for it. In a depression, it gets depressed and it comes back. You push on it. In a recession, you push a little. In a coronavirus, it stops. It goes in and it's an empty hole to the bottom. It's scary to joke about. We don't have terms to describe this. However, we can look and put it all together. And when the medical all clear is sounded, or we might sound it in part, or that's another whole topic for another item. Will there be an all clear, or will there be a little more clear every day? But when this is all sounded, it's going to come really back. The big question we don't know, is how long it's going to take to see that happen.
Yeah. Well, Paul, this has been more than fascinating, and I really, really appreciate you taking all this time to share it with us. Hopefully ongoing, we'll get updates every so often and get your perspective. But I'm looking forward to your books that are going to be coming out, and certainly we'll let this audience know about them when they're ready. I'm sure they'd want to read them. And,
Thank you. Thank you. And if I want to end this, I want to remember Charles Dickens' Christmas Carol, and the most beautiful line, which really applies to all of us, and particularly our old and the people with weak immune systems, and the people who have had leukemia, and the people who just think life has been so fine thanks to medical technology, who are now so much at risk, is the lines of Tiny Tim in Charles Dickens' Christmas Carol. God bless us. everyone, stressing the everyone.
That was beautiful. Thank you so much, Paul. And for you who are tuning in, I really hope that you learned as much from this as I did, and that it helps you figure out what steps to take in your future. So thanks for being here.
Thank you.
Greetings. I'm really excited to have this next conversation. I think you'll really want to lean into it. We were preambling a little bit, and I was talking about my perspective. I think we're about to see the biggest wealth transfer in the history of humanity through this pandemic. I'm not judging it's good, it's bad, the government should or shouldn't do this, but I can just say that a lot of wealth already has shifted and will continue to shift throughout what's going on right now in the crisis. So our next guest, Jeff Bishop, has some perspective on this and also some strategies that he's utilizing right now that he'd like to share. So first, Jeff, I just want to say thank you for taking the time to be with us.
Hey, thank you. I wish we could be in person for this.
Me too. It's just the nature of the beast now. It's like we've made several docuseries that revealed films. We've never done anything, via a Skype or Zoom or what have you, but it's the way of the world, at least for right now. And we didn't want to
it's the way it is. I'm glad you guys are doing this. I'm a big fan of your work, by the way. You guys do great production, so I'm glad to be here today.
Thank you so much for that. It's good to be with you. Can you just, starting out, tell us, what you do and how you got to be doing what you're doing right now?
I'm the CEO of RagingBull.com. We're probably the fastest growing financial education website in the country. We have different programs with different real money traders who are in the market every day that are fully transparent on their trades, and they educate other people on their trading as they're doing it. So you can watch our real professional traders trade different strategies in the market each day. So it's a pretty unique spin on education. So we're not just teaching people, how to trade options or how to buy stocks and stuff, but we're actually doing the work. So we're in the trenches actually making trades too while we're teaching. So it's kind of like a applied education, if you will.
What did you do prior to that? Like, what got you to start Raging Bull?
Yeah, I've had a lot of jobs over the years. I had several small businesses that ended up failing, or I just kind of walked away from early on. I've been with Raging Bull almost 10 years now. Prior to that, I had another company that did financial marketing. So I learned a lot. And my ultimate background, I have a finance degree and a master's degree in economics. So I'm pretty interested in the markets. I really wanted to figure out trading. I thought the college would be the way to get through that, but turns out that was not my ticket to learning about the stock market. I had to learn that on my own. So about a decade of hard knocks and learning my own way, I finally became successful and learned strategies that I could put in place over time. So that took me about 10 years of my life there. While I was doing that, I also had another financial marketing company that I had prior to Raging Bull. So I was developing strategies. And then I realized there was a need in the market from people who really wanted to see real traders out there. So there's a lot of education companies that simply teach you what a call is or what a put. They've got some basic education, but putting that to work is a whole nother thing. So we really started our company as applied education from day one, and that's kind of been our hallmark the whole time.
Well, nothing teaches like actually doing it, right?
Yeah, I mean, the way I look at it, it's like,
my son is in finance.
You get your brakes fixed. Do you want to see someone who has just read all this about brakes and knows everything about brakes, or a mechanic who has replaced 1,000 brake pads in his life? You probably want the guy who's done this over and over. So that's what we try to bring to people. And it's not all roses, man. Wins and losses, we're able to show people what it's like to be a real trader. I mean, in difficult markets like this, it's really good to see what actual traders are doing each day, because they're dealing with the same ups and downs that everyone else is, and how they bounce back from it really is a good way that everyone can learn.
Yeah, it's kind of the good, the bad, and the ugly, right?
It's all out there.
You got to look at it all. My son who's just graduating college is graduating with a finance economics double major, and I opened a small brokerage account for him, saying, okay, let's actually see how this works in practice rather than just theory. And there's nothing that educates like that. So I'm very aligned with your philosophy.
Yeah, it's all different once you put your real money to work.
Yeah, exactly. So now let's talk about how you see things. So, we're literally, I know it's very fluid at the time of this recording, which is April 1st. We're in the midst of the whole pandemic. The economic shutdown is still going on. There's a lot of uncertainty. The market's all over the place. I mean, it really is like it's a roller coaster ride. So what is your generalized macro view of what's going on right now, and what do you think we should be thinking about when it comes to our own personal wealth and finances?
Sure. So I look at things two ways. So generally as a trader, I trade pretty short terms. I'm looking at a week or 2 weeks out, and I'm trading option strategies around that, which I'll talk about in a little bit. But on a macro level, I really think that we are in the early stages, not in the recovery stage of this thing yet. So I still think the market's got quite a ways to go here. We're going to probably retest the lows that we saw in February. So in March, I don't think we're out of the woods yet. Throwing a $2 trillion stimulus bill is certainly going to provide some firepower to give you a boost, but I don't think it's getting us out of the woods yet. As I look around, just some of the things that I look at are bankruptcies that are coming up. So as we look at things, I look at my little city around me, I see bakeries that are starting to go under already, little restaurants, some convenience stores. There's places that I can just see in my own little small town that are already filing for bankruptcy. They're shutting their doors, saying they're not going to reopen. And we're only like a month into this, if that. So I look at like a couple months out and what's going to look like across the country. So I think that's going to be a big obstacle for the economy to overcome, because there's not going to be jobs to go back to for a while. You can't just, if the restaurant around the corner folds, you can't just go back to work there. It's going to take time for that restaurant to find a new owner and ramp up again. It's going to take a while for the economy to get going again. So I think we've got a big hill ahead of us before we're going to get back to all-time highs again.
Do you think that things will go back to normal, or is there going to be a new normal in your mind as far as how things are going to look once we are back on track?
And I think that this is the kind of event that's going to have a new normal. So I think that we're going to see things that just transform our daily interactions with people. I think we're probably done with the high fives and shaking hands. I think we're probably going to see a big decline in places where there's a lot of close interactions with people. So even if there's not a pandemic at hand, even if things are fine, I think people are still going to be very standoffish. This is going to scar people mentally for a long time. So things like cruise industries and airlines, perhaps, it's going to have an impact on how people approach those industries going forward. So those things are going to have to change. We're going to do a lot more video conferencing like this. I think there's going to be people are a lot more receptive to it. They're going to get really comfortable with it. And we're going to see video conferencing and telecommuting as probably it's going to get a lot more popular in the next few months. And over the next few years, I think we'll probably see a shift away from people needing to go to the office as much. They're going to get more comfortable working at home. There's going to be a lot of things out there that are just going to probably change. They're going to transform and stay that way for quite a while. So I think we need to be ready for that as investors. There's going to be winners and losers in this. So I think we need to look at what things are going to be losers and probably won't come back, but which things are going to be winners also. Where should we be looking to allocate capital now and take advantage of people really, truly panicking about the economy?
So right now, when you have people that follow you come to you and say, I just lost, I just saw a bunch of my retirement or my wealth evaporate in the market, at a startling speed. Is it at the low? Should I sell now, or, do I run the risk of losing more? What should I be thinking about? What kind of advice are you giving people?
Well, my first thing is that no one's got a crystal ball. So it's foolish right now to say this is the bottom, or this is the top, or this is anywhere. So I think just on a practical sense, it makes sense to start having a horizon. If you want to be a longer term investor, I think it makes a lot of sense. Me personally, that's why I'm looking at things where a longer term view. I'm looking at stocks I want to own. I'm not saying, okay, I'm pushing all my chips in right here because the market's down 30% and surely it can't go any lower. Well, if we look at history, markets can go a lot lower than 30%. So I don't want to push all my chips here at 30% and the market drops another 50 or 60% lower. So I think it makes sense to start finding and identifying the key companies that you want to be involved with and start scaling in. So maybe you set aside the amount of money you have, maybe it's the money you have left, and start saying, I want to put it to work, this amount of money each week or each month. I want to start buying these stocks no matter where they're at. And in 6 months or a year, maybe you've established the positions you want to be. You're going to have a nice blended average. You're not going to get the absolute high or low, but I think you have a good position at that time. So I think you need to identify the companies you want to be with and look for opportunity to start scaling into those. And don't try to go all in. Don't try to time the top or bottom. It's just way too difficult right now.
Yeah, I think that's been a universal sentiment from many of the experts is like, nobody's got a crystal ball. And
I mean, I rode through the dot-com bubble. I rode through the financial crisis and 08 and all that. So I know how these things work, and they are so violent to trade. It looks easy in hindsight. You say, oh, well, there was the bottom, and then it magically rebounded. When you're in the trenches in these things, it's just not that easy. It's gut-wrenching. And you're seeing the portfolios move 10% a day, and you don't have any sense of what's going on. And there's days that you think, the economy is actually going to collapse and we're not going to recover from it. So you go through all these mental challenges along the way, and it really inhibits you as an investor. I think you need to step back and have a bigger picture and say, okay, you know what? For me, actually, I don't think Apple is going out of business. I think Apple is going to be a key of the foundation of the economy going forward. So I want to own Apple around this price. Maybe a little lower, maybe a little higher. I don't know, but I think Apple is going to be here in 2 or 3 years, and it's going to dominate. So I want to take advantage of lower prices. So that's one example. So you want to start putting money to work on the companies that you think have the best opportunity to be, the ones that be industry leaders and are really going to dominate coming out of this. So I think it makes sense to put your money to work. Otherwise, start buying guns. Go store up food and go hide in a cave, because there's really 2 options here. The economy is doomed, or we're going to get through it and there's going to be some clear winners. And history has always proved that we're going to get through it. And I believe that'll be the case too.
Yeah, no doubt. There's how and when, those are the things we don't know, but there's definitely going to be the other side of this. And I think everybody will be just fine. And even though a lot of people are stocking up on guns and food, maybe it's a fallback position, but we're here to talk about maybe how we can navigate these waters.
Hey, having a little bit of guns and food is not a bad idea.
Yeah. Well, admittedly, I have both. So now the other side is, all right, so I'm looking and saying, this is not about, and this is why I really try to have people understand, the market recovers when people start entering back into it, start trading it, start adding liquidity to it. That's how the economy gets back on track. It's really a win-win thing. We're not talking about buying, thousands of bottles of hand sanitizer and trying to profiteer. We're talking about how to be very level-headed and how you can take the current circumstance and enter into it and recover maybe some of the losses, or if you didn't have losses, even maybe you have some gains through this process. So you talked about short-term trading and options. Can you maybe get into some details about what you're doing yourself?
Yeah, so when it comes to short-term trading, I've been able to ride out this storm. I'm not very profitable in the year, honestly, but I am profitable. So I'm pretty happy about that. I've had some, wild rides along the ways, but I think the key for me is not trying to pick a direction. So too many people are trying to pick a direction if Apple's going to go up or Apple's going to go down. Well, what's happening is Apple goes up 10% one day and goes down 10% the next day. And if you're not quick in trading in hours, you're missing an entire move, and it's just shaking and everybody out. So you're getting chopped up in the market if you're trying to pick a direction. What I'm finding is that with options, they're priced so expensive right now, because when there's a lot of fear in the market like there is now, option prices explode. They are prices that we have not seen since the financial crisis. So option prices are huge. And if you become a seller of options and you play different ranges of stocks, I feel like there's a lot more level of security there, because I don't know if Apple's going to be up or down 10% tomorrow, but in 2 weeks, I can bet that it's going to stay within a 30% range, perhaps. Maybe it's not, but if I pick a big range like that, I have a big level of comfort saying, okay, that's going to work. And if I'm wrong in a week or two, I can put that trade on again. And I'm certain that Apple is not going to make a 30% move week after week after week. It might happen once in a while, but I'm picking ranges that are extreme and that all I have to do is be right and the stock stays within a range, and then I can be profitable in that trade. So that's what I found to be the most successful for me in this market, is selling those premiums and just betting on ranges for the stock rather than direction.
So let me ask now for details for people that might not understand options so well. Can you talk about the difference between selling options and buying options?
Yeah.
Calls and puts, basically.
Sure.
And I
think that's a big thing that people just, if you're new to trading options or trading in general, you probably don't even know that you can sell options instead of buy them. So you're used to buying stock. So you go to your E-Trade account and you go type in, I want to go buy 100 shares of Apple, and you hope Apple goes up. And for the last 10 years, you've been right. Apple just goes up week after week after week. But when Apple goes down, you probably don't have a strategy to profit if it goes down. So some people have learned that they can short sell. So you can take Apple stock and sell it and then buy it back at a lower price. So you can profit if Apple stock drops, if you're selling the stock. With options, they're actually priced to be in favor of the seller. Options are basically an insurance contract, and insurance is always priced in favor of the seller. So if you go look at Warren Buffett's insurance companies, go to Geico, for example, and you want to buy homeowners insurance. Well, that homeowners insurance is priced in favor of Warren Buffett. So he might sell you an insurance policy for $1,000 a year on your home, and maybe it protects that $250,000 investment or whatever your house is worth. Well, he knows the odds of that house being destroyed are way less than $1,000 per year. So he's selling that. Once in a while, he's going to be wrong. So you're going to pay that $1,000. Your house is going to get destroyed, and he's going to recover. He's going to pay that. Well, he makes it up because thousands and thousands of other houses don't get destroyed, and he just collects those premiums all the time. Well, those insurance premiums are the same thing as like options. So when you're buying an option, you're basically buying that insurance from someone else. So you're buying insurance on that stock from someone else. So if we're talking about Apple options, for example, there's calls and there's puts. A call is a bet that a stock is going higher if you're buying it. And a put is a bet that the stock is going lower if you're buying it. Well, the seller is taking the opposite sense. So the seller, if you sold a call to somebody, you're basically saying you're betting that the stock is going to be flat, or it's not going to go higher, or it's going to go lower. So you're betting it's not going to happen. And if you're right, you get to collect all the premium you sold to someone else. And a put is the same way. You're betting a stock's going to go higher or it's going to be flat. So you're going to collect that premium if the stock doesn't move or works in your favor. So there's different ways with these strategies where you can be a seller of options, but really control your risk at the same time. So I talk a lot about how we use options to control our risk, not just wildly sell options and not understand what our risk profile is, because a lot of times that becomes so enticing to people. They really want to sell those options and they don't realize how much risk they have. So I always talk about how we set up our risk parameters so we can't get blown up in a trade if we're wrong. But if we're right, we're paid to take the bet. And more often than not, you're going to be right when you take these bets.
And so now that's interesting. So when you're the seller of the option, you're collecting the premium, saying I'm selling this option. I collect the premium, and if it happens to trigger, you still are probably in a range of pricing that you feel comfortable with.
Exactly. So one thing I always try to do too is sell two ranges. So let's say Apple is at $200 today, and a month from now, I'm going to make a bet that it's not going to be under 150 and it's not going to be over 250. So whatever this range is, if it stays in the middle of those two ranges, I'm going to win. But no matter what, I can't lose on both sides because Apple cannot both go above 250 and below 150. So no matter what, one of those bets I'm going to win 100% on, and the other bet I'm going to lose somewhat if it doesn't work out. So it's all about keeping your risk in place and trying to hedge your bets on both sides because you just don't know which way things are going to move. No one watching this video knows if the market's going to be up or down 10% a week from today or a month from today. We just don't know, but I feel like there's a comfort level in ranges, and that's where I'm trading this market a lot right now.
Is and you said this, and I've heard other people say this too, the options market's very hot right now, so the price of options is pretty high, right? So how does that impact your thinking around all this?
Well, as an option seller, it becomes very advantageous because high option prices mean there's a lot of premium you can collect. You're being paid to take risk right now. And the reason is because people are so fearful, they're paying a lot of money. They're paying a lot for those premiums. They're willing to pay a lot for the insurance on their stocks right now. So as an option seller, you can capitalize on that. And where I used to be able to sell a range of like maybe 5% on a stock, well, now I can sell 15 or 20% on the same stock and collect the same money. So as an option seller, you can have a lot wider range right now and still be able to collect the same amount of money. And that's just because of the amount of fear and the amount of volatility in the market at this moment. So it's really a good market for being an option seller. You're going to take lumps here and there, just like any kind of trading, but week over week, it's just a really good strategy to have in this market right now.
So now, can you give us a use case? Let me talk about an actual trade that you did. And actually, to balance it, maybe talk about one that worked out really well for you and one that maybe didn't work out as well for you, so we can kind of get a firsthand sense of how this runs.
Sure. How about one that didn't work out for me? So Apple, I trade Apple a lot right now. So when the market is this volatile, by the way, I try not to trade too many stocks. I don't feel like you need to. The market all stocks are very correlated to the S&P 500 or the SPY. What that means is if the S&P moves up 1% today, most other stocks are going to move about 1% also. We're not seeing a lot of stocks move around that aren't correlated to the S&P. So when the markets are really nervous like this, you just find that stocks usually trade close to what the S&P does. So I'm trading the S&P a lot right now, the SPY. I'm trading Apple a lot because it really follows SPY also. It's got a lot of bidders to it. I mean, a lot of people want to buy the stock. So I feel like this one gives me a little comfort level. So I try to stick with the bigger names. And then plus when you're trading options, liquidity is always an issue. So it's a lot easier to buy and sell a stock and get a good price on it. You get the market price easily when you buy a stock. Well, when you're buying and selling options, there's a big spread on the bid and the ask. So in times like this, there's a big bid and ask spread on options, and it can become difficult to get the right price that you want. So if you're trading more liquid, bigger stocks, the option spreads will be a lot tighter, and you'll get better prices on those, which will increase your trading profits. So I try to stick with the largest stocks to begin with. So with Apple, for example, I had a bet a week or so ago that it was going to stay within like a 20% range. I thought that was a really good bet, and it was staying there, and then it didn't. The market just kept falling and falling and falling, and it took out one side of my trade, and I took almost a maximum loss on it. So, that happened really quickly. The market went way farther than I thought it would. And so I took a pretty good loss on it that week. What I do is I set it up for a week or two out. I can take the same bet, just keep moving it out, and then I'm going to be right eventually. So I might lose 2, maybe 3 weeks, but I'm not going to lose week after week after week with the strategy. It's going to work, and I'm going to be able to recoup those profits over time, which has happened. So at one point, my portfolio was down around 10% on the year, sometime in March, on some of those really, really volatile days. Well, and then by chipping away, week after week, I'm picking up 2%, 3%. And now I'm well back over break even now. So I'm closer to 10% now. And, if I continue the strategy, I'm going to slowly build that portfolio back week after week, slow percentages over time. I'll take a few hits here and there, but the thing is, you've got to define risk, and that no matter if Apple totally fell apart and went to zero, for example, I wasn't going to lose my whole portfolio. So I think having a defined risk really is important in this market. And even though you get hit sometimes, you can set it up for a different week. That's okay.
Maybe we could talk a bit about the psychology of this, because I think, what you said some things that are like, I think need to be underlined a little bit. What happened was, wow, a trade went bad. One psychology is, I got to turn around and try to get it all back as quickly as I can. Another one is, incrementally, I'm going to be very patient. I'm just going to keep working my system, and I'm going to build it back up, and I'm going to get it back. And so can you talk about the psychology of trading in the way that you do, and the types of mind frameworks you need to be able to make sure you don't do stupid things?
Sure, man. I gotta say, I've been there. So I've made every dumb mistake out there. I'm guilty of it. I've tried to learn from it. I don't always follow it because I still play cowboy once in a while, I gotta admit. But I try to step back, and I realize that my portfolio is just a snapshot in time. So it's just one snapshot today, or this 1 hour I'm looking at it. I'm trying to think like, okay, I want to look at this next month or this next year. If I had a setback, I don't get upset and feel like, man, I've got to make that back this week. I've got to make this happen. That was a really bad week, but I can get back and I can do it and I can make it back this week. That's just a flawed mentality, because it makes you take risks that you didn't want to take in the first place. And you're forcing yourself to make trades that you didn't want to take. So first of all, people need to have a defined risk when you get into a trade. I always tell people, if you get into a trade without a good game plan, then you're already losing. You're going to lose that trade. So you've got to have like a stop loss in place. You got to have a profit target you want to, and you've got to have a plan before you actually get in your trade. And then you got to stick to it. A lot of that also comes down to position sizing. So, you have your portfolio of $100,000, whatever, and maybe your average trade ends up being $5,000 or whatever, 5% to your portfolio, whatever it is. I don't know for you, but I think you need to stick with the same plan that you've got and don't deviate from that. So if all your stocks got beat up one day and you just lost 20% of your portfolio, whatever the number is, in a week or two or a month, that stinks. I know it's bad, but you've got to realize that's just a snapshot in time. And the worst thing you can do is try to say, okay, instead of 5% positions, I'm going to start going 20% on a leveraged position and make this all back in a week or two. That happens sometimes and you will win, but more often than not, I've found that big bet just will cascade and it'll decimate your portfolio. It'll lead to a really bad mistake that you can't recover from easily. So I feel like if we're disciplined and we stick to our rules and have rules, you'll be able to recover within a few weeks or a few months. You'll get right back on track. So that's how I approach things now. I don't get too nervous or upset when I've got a really bad day in the market. I just, I'll take my losses if I need to. I'll step away, be done with it, regroup. When the trade sets up again, I'll come back and make a new trade. But I'm not making trades that'll blow up my portfolio. And I'm not making trades that are going to make me a hero either. I'm not going to be able to double my portfolio overnight. So I'm not going to be able to take that much risk where I could have something that's going to magically make me a fortune overnight either. My process is steady and consistent. So I'm going to have a few bad weeks, but I'll have more good weeks along the way too, no matter what the market does.
It's interesting. In Vegas, they have this phrase, scared money never wins, right?
That's right.
You don't want to go sit at a table with money that you're afraid to lose. You have to sit down and I think have kind of the process that you're talking about.
Yeah.
My next question, can someone who has, who's not a sophisticate, at least when it comes to trading equities or options, can someone learn this and do it effectively? Because you have a lot of you're what I call a pro. There's pros out there. They're putting in their positions. They know what they're doing. They've got a lot of experience. So if you take someone like me who doesn't trade options, and I'd say, okay, I'm learning from you, and I like what I'm hearing, and I'm finding I have a lot of time on my hands right now at home.
Yeah,
and I've got an account.
It's a great time
I've
to
got
study.
my TD Ameritrade account, and maybe I'm going to go in and enter this fray a bit here. It sounds like something that could help me recover or even get ahead or whatever it might be.
Sure.
am I going to get eaten up alive, or am I capable of making this work?
So I think everyone is capable of it. I've worked with thousands and thousands of traders over the years, and I've learned that the most intelligent, most educated people are not the ones that are most successful usually. It's the ones that stick to a plan and are disciplined and don't try to deviate from what works. So the guys who actually just do the work and stick to it are the most successful over time. And it really is something anyone can learn. I feel like too many people get scared about the market or scared about trading options because it's new. It's kind of like a foreign language in that, you know, when you first hear it, you hear a foreign language, like, oh, that makes no sense. I'll never understand what that is. But, you know, if you sit down for a month and you study and you listen to some tapes and you have a good teacher, you can carry on a conversation in a foreign language in a few months or whatever time, but you'll get it eventually. It's like anything else. So it's maybe like going to the gym. You go to the gym and you think, man, I want to get a good six pack. I can't wait to get some good abs. Give me some of those abs. So you start going to the gym and you find out, oh, that's hard work. Actually, I don't want abs. Well, then if you don't want to do the work, then you don't really want the reward either. So it is work. You will have to study, but you can do it. I don't think there's anyone out there that can't do it because the principles are pretty basic. And there's a lot of good, simple strategies that anyone can put into place without a lot of risk. And also there's so many good platforms out there where you can paper trade right now. And I always encourage people when you're trading for the first time, especially in options, just paper trade for a while. You can go to TD Ameritrade or other places, and they've got a paper trading site where you can simulate real trading without having your own money at risk. So you can make the same trades that myself or other people do, see how they work out or don't work out, and learn from that. See if you can actually put the trades together, see if they work out, learn why they do or don't work out, and then start applying your own strategies. Start taking the same things that we're doing and applying to your own stocks that you're following and see if it works. And when you get a handle on it with paper trading and you become confident and you start saying, okay, I'm consistently making this work, I understand what's happening, then you can move to trading small amounts. So no one needs to get too aggressive, but if paper tradings work, why not go to a small amount of real money and put that to work and see if you do the same thing? So I feel like you can progress in this. You don't have to go all in and put all your portfolio into trading options overnight. I think that's a really bad idea. Everyone should kind of work their way slowly into this and realize that this is a marathon. This is a lifetime for you. It's not a race. It's a marathon that you're going to be doing the entire life. So don't feel like you've got to get in all of a sudden and make it work. You can slowly do this and build something that you can do your entire life. So that's what I think it's really all about.
I think that's a great takeaway as far as saying, hey, I guess you can dip your toe in the water if you're doing paper trading. You know, it's like, you know, it's virtual trading to see kind of how you like it, but it's the long game, meaning, you know, you're gonna get better and better at it over time. Don't feel like you're gonna try this for 2 or 3 weeks with real money and then quit. You should really be committed to an ongoing.
I also think that there's a lot of different strategies out there, and it all comes down to your personality. So some people are very analytical. They want something that's almost like a machine. Like they can just make this black box and they can have very, very specific parameters, and they can just have charts and alerts that make them know when they're going to trade and get out. They like that. They like that safety of it. And I feel like you can do that. Some people are much more aggressive. They want to be more involved in the market. Some people want to be less involved in the market. Some people are very short-term traders. Some people want to be longer term. So the market provides all kinds of different strategies depending on your personality and your risk profile. So I think a big part of it is identifying who you are first and what you're comfortable with. So you're not going to be comfortable the way I trade, or maybe you will, but you know, I think it's good to learn from lots of different types of traders and how they trade and what their personality is and how they've learned to put that to work for them. So each successful trader has learned their personality and developed a strategy for trading around it. So I think that's a big key also.
Let's say that I'm not a professional or a full-time trader,
Sure.
But I want to make this as a part of my activities for my own income and wealth development. And let's say I trade similar to your style, if I were following your protocol and looking over your field, or How much time per day would I have to put into this to be able to do it effectively?
You know, if I was just solely working on the trading side, I could probably set trades up each day if I wanted to, and it would probably take me 10 minutes a day, honestly, because I don't need to do a lot of homework on the market overall. I'm just looking at different price levels and making trades based on that. And for me personally, the trades that I put on, typically I put on for a week or 2 weeks at a time, maybe a month even. So I'm trying to make a little bit amount on each of those trades every day. None of those trades are going to have a big move one way or the other. I'm trying to collect a little bit of income every single day off of those. So they don't need a lot of management either. So personally, that's the way I like to trade, especially in this market when it's so wild, because I just don't feel like I can sit in front of that computer and actively trade all day and be good at it. It didn't work for me.
Really great insights. So first of all, thank you so much, Jeff, for sharing all that. Before we tie up, is there any other comments or something that you want people to know, you know, the person right now viewing this saying, hey, you know, here's just the last thought for you before we tie up?
Well, the first thing is I know that a lot of people watching this have not had a good year so far when it comes to the market. So maybe you just got in the market recently. Maybe you are approaching retirement and you just saw a big dip in your portfolio, and now you're rethinking how things are going to work for you. I think everyone just needs to take a break for a minute and relax. So I think that there's a lot of opportunities here, and that's what you need to focus on more than losses that have happened. So we all have losses. We all have setbacks in life, especially in trading, but those are nothing that you can't overcome. Okay, none of these are insurmountable things that you can't overcome. You will be able to find a way to get back to where you were at one time and get back on track. So you're going to have to take things in your own hands, though. I think if we just leave money blindly in the market, that you're just not making the most of it. So if you actively take control of your own financial future, this is a great time to do that, because you've probably got a lot of time at home. We just talked about that you could be studying right now and doing new things. So this is a great time for you to be studying, learning new things that can make you better and set you on the path for a profitable future going forward, where if the next financial crash happens, you'll be prepared for it, because maybe you're not even expecting it, but you won't be so exposed. So maybe you just got caught off guard this time. That's okay. You can make it back. Things will be okay. But it starts now, the decisions you make from this point forward. So I would say that just take the time to learn more, start putting the odds in your favor with your trading, and realize that this isn't something that you can't overcome, that you can come back from this.
Really great commentary. So thanks for that, because I think that's what people need to hear. You can come back from this. Being blind to what's going on, I think is also a poignant point that you're making, insofar as saying, hey, just to blindly leave money in this market, hoping, going and hiding and hoping that things are going to work out, probably not a good idea. And if nothing else, what people hopefully are learning in this particular crisis is that they have to take more responsibility for their investments and how they're being used.
I mean, I saw the same thing, the financial crisis. We had so many people who got wiped out or lost half of their money in the financial crisis. And, in Raging Bull and our services, we saw a lot of people come in during that time, and many of them became really successful traders. In fact, a lot of them left their jobs permanently and decided trading was going to be what they wanted to do going forward. So I think times like this make you evaluate what you really want to do in life and what's important. And maybe it's time to try this trading thing out. Maybe it's for you. Maybe it's not full-time. I don't think full-time trading is for everyone by any means, but I think that everyone should become more educated and just be able to take more control of their financial future rather than leaving it blindly in the hands of the market. I would say hoping and praying is not a strategy. So if that's your strategy right now, you need to fix that. It doesn't need to be hope and prayer is the only thing. Also, I think a lot of times that we just want to buy whatever stock and hope it works out. But honestly, there's other strategy you should be putting in place. So stretch yourself, learn a little bit more, learn about options. It's nothing that's so scary that you can't do it. You can absolutely do it. Just try it, learn, and put strategies in place that will protect you from the future things that could happen.
Really wise words. And we'll be, Hopefully we'll get some updates from you, and certainly we want to share information about Raging Bull with our audience, so you all can be on the lookout for that. There's a lot of great assets there that might be very useful for you, so we'll make sure that we get stuff in front of you. So Jeff, thanks for taking time out of your trading day and sharing your wisdom with us, and hopefully we'll, maybe as things are moving along every once in a while, we could check in for some updates.
Sounds good. I got plenty of time. I'm at home all the time now, so.
Don't we all? This has been great to talk to you, and it's giving us, like I said, how I'm spending my time is talking to people like you right now, which I feel very grateful for. So thanks so much. And for you who are watching, I hope that we're bringing a lot of value to you, giving you things to think about, and actually some things you can put on the ground, actions you can take that will make your future, especially your financial future, better than it would have been otherwise. That's why we're doing this. So thanks for tuning in.
Okay, well, thank you. This is a great series to put together. I hope a lot of people learn and just expand their education, period, this time. This is a great time to do this. So thanks for doing this. I'm glad I could be a part of it today.
Terrific, Jeff. Thanks so much.
Thank you.
Congratulations on making it to the end of episode 1. Amazing, amazing thoughts and content, right? Well, episode 2 is going to take you to even higher ground. We have my interview with Andy Tanner, and I have to tell you, this is almost like a masterclass. This guy is brilliant. He's got great orientation and concepts, but he also speaks in common sense terms, and he is literally showing us exactly what he's doing right now. I'm not saying just talking about it. I'm saying showing us. He shares his screen. He shows us the kinds of trades he's doing. It's phenomenal content. I was riveted the entire time. Also, we're going to hear from a master, an entrepreneur, Mike Dillard. And I have to say that Mike is one of the most self-reflecting, introspective people I've ever met. He really searched his mind from what happened in 2008 when we had that great economic downturn. And he looked at the lessons they learned and then talks about how he's applying it here. He also has some special areas of expertise like cryptocurrency. We went into talking about Bitcoin and how this whole thing might be affecting that, as well as other thoughts and ideas, disciplines and strategies relative to trading in the marketplace during this particular period. So it's a great episode tomorrow. I look forward to sharing it with you. Don't forget, you should be sharing this with other people. They can still register and watch all this content. So please go ahead and share Crisis Investing 2020 with others so they can get this information too. I look forward to seeing you in episode 2.
Look, the market crashed 2 weeks ago. I've been doing this a long, long time. I've been a student for a long time. I don't even like to be called a teacher because I'm still learning. Really what we're hoping to do is someone says, you know what, this seems learnable. Maybe I can start learning it. Maybe this is a solution for me. And please listen to this, everyone. I don't want to be a beggar, but please listen. These returns are bigger than we normally get because the market has moved. I wouldn't want anyone to think this is regular. This time right now with this volatility is what's causing these big returns. Normally, it's nothing like this. And we said, let's go from being traders to investors.
If we see a really big drop in real estate markets, I'm going to allocate probably the majority of my money into cash flow real estate. That's an asset that I would love to buy a lot of and hold for the next 20 years. You need to put those triggers in place so that it allow you to make a decision that's not based on emotion. And you have to follow that system, because if you don't, you're like, oh no, that's when you're going to run into trouble. So how do we save ourselves from ourselves? Going back and again, looking at lessons learned for 2008, you want to reduce and get rid of emotion, and you want to buy yourself time. And so the more time you have to outlast any of these market conditions, the better you are. Don't think the world is going to fall and sell all your stocks. Don't think that this is going to end next month.